So good evening all of you. I hope you all are doing good. Good evening to all of you. So in the last class, we have done almost the entire depreciation discussion. Okay. Except one thing which is pending, which I am doing it right now. Okay. Apart from this, we have done the entire depreciation. Now the one thing which is pending is as follows. Pay attention please all of you. See here please all of you. The one thing which is pending is a small ICDS. As I have told you in the last class also, this ICDS is not anything great. Okay. It is somewhat similar to what your accounting system says. That how should you recognize your loss or how should you recognize your gain under the income tax law? Which loss, which gain? That is the forex gain, forex loss. So it is talking about somewhat similar to what the income, what the accounting standards say. Let me show you. ICDS 6. Effect of changes in foreign exchange rates. Initial recognition. It means on the day of transaction, how will you recognize? Okay, a transaction at what rate? So today, if I am buying anything or if I am selling anything, I will recognize as per the date of transaction. Okay. Whatever is the transaction rate today, that rate will be applied to record the transaction. Suppose I sold goods of $1 lakh today. Therefore, I will record the sale as per today's rate. $1 lakh into whatever is the rate of dollar to rupees today. Is it clear? Now, there is one more option which they are giving us. Pay attention, please. That is, you can take an average rate for a week also and record, or an average rate for a month. It can also be taken. Okay. You can also take one single average for a month, and entire month you can use that. Okay. Or entire week you can use that rate to record all your transactions. But in that, there is a condition that if the exchange rates fluctuate significantly, okay, if there is a significant fluctuation in the rate, okay, then don't take the average, then take the rate on the date of transaction only. Okay. So if there is a significant fluctuation, you have to take the rate on the date of transaction itself. What about on the balance sheet date? On the balance sheet date on 31st March, again you have to convert as per the rate given on the closing rate. Shall be converted as per the closing rate. If the closing rate is very unrealistic, it means suddenly some activity has happened in the economy and your rate has suddenly increased or suddenly fallen. Okay. Something weird has happened near to 31st March, because of which the rate has increased significantly or the rate has reduced significantly. Then you have to record as per the amount which you are likely to receive or you are likely to pay. Whatever is the amount you are likely to receive or whatever is the amount you are likely to pay, at that value you have to revalue on 31st of March. Okay. And for non-monetary items, you have to record as per what? The date of transaction and revalue on the closing date. So there is nothing new they are saying in the ICDS. This is what we do in accounts also, financial reporting. The financial reporting treatment is also similar to this only. Nothing new. Absolutely same. And this ICDS is not very important also for examination as far as exams are considered. What is important is, I would again draw your attention. What is important is section 43A. Absolutely important. This is very, very important for examination. So pay attention on this much. 43AA they have not asked so far in the examination. Okay. So this is what your chapter of depreciation is all about. And now we are going ahead with the next chapter. And what is the next chapter, sir? Pay attention, please, all of you. So now today, first of all, the very first target which is there in front of us is to do other deductions first of all. Okay. Today, first we are going to complete section 30, section 31 and then section 36. Okay. So these are the three deductions that we have on our target as of now. So we are going to complete these three first and then we'll move ahead with the next part. Sir, what is there in these deductions, sir? Can you please help us? Yes, definitely I'll help you. What is there in these three deductions? If you remember, we have started with the discussion that all the deductions in PGBP are segregated into two categories. That is specific deductions covered under section 30 to 36 and general deduction covered under section 37(1). Remember or not? Please tell me. So specific deductions are covered under section 30 to 36. General deductions are covered under what? Under 37(1). And in specific deduction, within specific deduction, that is under section 30 to 36, there are two categories. One category which is applicable to all. And second category which is applicable to whom? To a particular sector. So we are not starting with sector as of now, first of all. We are completing those deductions which are applicable to all the SSCs. Okay. So in that category, we have done only one section so far, and that is section 32. That is depreciation. Let's move on to the next one, that is 30, then 31, and then 36. Okay. Pay attention, please, all of you. I am starting with section 30 as of now. Pay attention. So what is section 30? Section 30 talks about 4 expenses. 4. It talks about rent. It talks about rates and taxes. It talks about repairs and insurance. Of what? Of building. So if you are incurring these 4 expenses on building, obviously the building has to be used for what purpose? For the purpose of business and profession. The building cannot be a personal building, obviously, na. That's very common sense. So if a building is used for the purpose of business and profession, and if it is used for any business, any profession, this section is applicable to everybody, then in that case, you will get these 4 expenses. Okay. Now we need to identify that we are using the building in what capacity. Pay attention, please, all of you. Are you an owner of a building? Or are you a tenant of a building? If you are an owner of a building, then obviously you cannot claim the deduction of rent. Yes or no? Because if the building is owned by you, are you paying rent to anybody? Please tell me. No. Then the question of rent does not arise. It is my own building and I am using for my business. It is my own building I am using for my classes business. It is my own building I am using for my restaurant business. So the question of rent does not arise. Okay. But if you are a tenant, you will get the deduction of rent. Yes or no? This is the very first thing that you have to keep it in your mind. Second, sir, what about rates and taxes? Rates and taxes are allowed to owner also, are allowed to tenant also, whomsoever is paying. Whomsoever is bearing the burden is going to take the deduction. Okay. If the owner is bearing the burden, he will take. If the tenant is bearing the burden, tenant will take. So whomsoever is paying will take the deduction. If you are not paying, then you cannot get. Plus, rates and taxes are subject to 43B. Are subject to which section? Section 43B, which we will read later on, maybe in the next lecture, not today. Sir, what is 43B? 43B talks about certain deductions are allowed only on actual payment. Therefore, rates and taxes are allowed to you only on what basis? Actual payment basis. It is not allowed on accrual basis. Acha, can I claim rent on accrual basis? Yes, you can. But you cannot claim what? Rates and taxes on accrual basis. That you have to pay and claim deduction. I hope it is clear to all of you. Are you clear? Third, so rates and taxes are allowed on what? Paid basis. You pay, you claim. Okay? Please tell me. Third, repairs. If you are doing any repair to the building, whether the owner is doing the repair or whether the tenant is doing the repair, you will get the deduction. But the repair has to be revenue repairs. Which repairs? Revenue repairs. Are you clear? Your voice is not coming, Palani, if you are speaking. Yeah, now it is come. So repair has to be revenue repair. It cannot be capital repair. So all kind of revenue repairs you can claim over here. Okay. Sir, what about capital repair? Will I not get capital repair? The government says that for capital repair, you have to do what? You have to capitalize the repair in the block of asset and then claim it. Okay. Suppose there is a building which is owned by me. Listen carefully here now, this point. Suppose there is a building which is owned by me. I am the owner of the building. Now I am making one more floor on that building. Okay. I am making what? One more floor on that building. For that it has costed me 50 lakh rupees. So the government says that you can add to the block of asset and claim what? Tell me. Claim depreciation on it. Okay. Now I will tell you the rare of the rarest case, which is very rare, but it is possible. It's not impossible. Suppose I am a tenant of a building. Okay. I am a tenant of a building. So if I am a tenant of a building, I will get rent as a deduction. I will get repairs, revenue repairs as a deduction. I will get rates and taxes as a deduction if paid. Yes or no? But. What about capital repair? Will I get the deduction of capital repair? The first question is, why will a tenant do a capital repair on somebody else's property? Did you understand the question or not? If I have taken a premise on rent, why will I incur an expense of capital nature on that building? Yes. But in case you still do, then what is the treatment? Okay. Then what is the treatment under the income tax law? So the law says, don't worry, if a tenant does a capital repair, tenant does what? A capital repair. Then in that case, don't worry. There is no building for the tenant to add. Yes or no? The owner can add the capital repair to his building. But where will the tenant add? So for tenant, it is considered to be a deemed building. What? The government consider this capital repair to be a deemed building and it is added to a separate block will be created of deemed building and thus he can claim depreciation on it. Are you clear? Please tell me. And last but not least, the fourth and the last expense which will complete this small section, that is insurance premium. If an owner is paying premium for the building, owner will claim deduction. If owner is not paying, tenant is paying, tenant will claim deduction. So whomsoever is bearing the burden of the insurance premium will claim the deduction. So these are the four expenses which are covered over here. I hope it is clear to all of you. Is it clear? Please tell me. Now pay attention. I would like to draw your attention to something important. Pay attention. See here. Listen to me. Don't see on the board. See here. Say for example, I am a tenant. Okay. And you are an owner. I have taken a property from you for 10 years on lease. Okay. Now I am doing a capital repair of 1 crore rupees on your property. Okay. Say I am making one more extra floor on your property. So I am telling you, sir, it is your building, I know, but I am doing expenses on it, capital expense on it, assuming that it is my own building. Okay. And I am doing around 1 crore rupees expenses on that. So the owner said that you do whatever you want to do. I said, no, sir, I am making one extra floor on your building. Okay. So the owner said, whatever you want to do, you can continue to do. I said, I agree, I can continue to do. I agree, you have given me the permission. But the thing is, after 10 years, when the lease period will be over, I am going to give you that particular area. I cannot take that area with me, na? I cannot say that my floor I will take away. Yes or no? So I am going to give you that. So see the treatment now. Today, I am incurring 1 crore rupees as a capital expense on somebody else's building. Can I claim depreciation on that? Please tell me. Deemed building, right? I can claim depreciation. Now after 10 years, when I will give him back, should I take some money from the owner? Should I take some money from the owner? I have done a capital repair for you of 1 crore rupees. After 10 years, when I am giving you back, you are going to get 10 times more money out of it. The value of the property has increased. Give me something, yaar. Okay. So when after 10 years, I am going to leave the building. Okay. So I am leaving that deemed building also, correct or not? Please tell me. So that is considered to be a transfer of block of asset. What it is considered as? Transfer of block of asset, and I have to compute depreciation on that, and then I have to compute short-term capital gains on that. If I am getting more than the WDV, it is a short-term capital gains. If I am getting less than the WDV, it is short-term capital loss. The way we compute capital gain or capital loss in the chapter of capital gains for depreciable asset, for block of asset. Alright, did you understand what I said?
Good, sir.
So in the year of transfer, when you are giving back the building to the owner, you are actually transferring a capital asset. You are actually transferring the block of asset. So capital gain implication will also come over here. Okay. So to explain that particular thing, in your textbook, in your main book, detail book, you will find this question over here. Okay. I want you all to come to this page with me. and I will read this particular provision with you all. Shall I? Shall I read? Where the business or profession of the assessee is carried on in a building not owned by him. It is not my building, but in respect of which he holds a lease or any other right of occupancy. And any capital expenditure is incurred by the assessee for the purpose of the business or profession on the construction of any structure. Okay? By way of renovating, extension, improvement to the building, then such capital expenditure will be treated as what? Say, building owned by the assessee. Are you clear? Please tell me. It will be deemed as building owned by the assessee. Say, for example, Mr. X is a tenant in a building in which he carries on his business. This example, on 31st December, he has incurred a capital expenditure of 4 lakh on constructing a room to be used as office. Okay? Now, will this be considered to be what? A deemed building? The answer is yes. Yes or no, Palani?
Sir.
Now, on 29th of November, he vacated the building and received from the landlord, say 2,40,000, say 5 lakhs. So, first we will compute the WDV of the building and then we will compare with the amount received from the landlord. So, the building is purchased or it is constructed for 4 lakh rupees. Can you see that? Now, it is constructed on which date? 31st December. So, in the first year, you are going to get 5% depreciation. Agreed? Because it is used for less than 180 days. In the second year, you are going to get 10% depreciation. Okay? And in the third year, that is in 24-25 previous year, you are transferring the asset. Are you clear? So, when you are transferring at that time, WDV is 3,42,000. Are you clear? Now, if you transfer for 2,40,000, transfer for 2,40,000, then there is a short-term capital loss. But if you transfer for 5 lakh, then there is a short-term capital gain. Check it, please. Is it clear? Please tell me.
No, sir.
Yeah, please say.
I am transferring after almost on the year end, no, sir.
So what?
Sir, I am not getting depreciation. The buyer will get only.
Buyer will definitely get. Na?
Only 50% depreciation. Sir.
Yes, yes, yes. Only 50%. Now, is it clear? Please tell me. I am going ahead. Niveda, where are you? Are you there or not, Niveda?
I'm here.
Okay. Now, so after section 30, let me go ahead with section 31. See here, please, all of you. It's a very, very simple chapter. Nothing great as such in this chapter. After section 30, now this is your section 30. I will just make you read from the color book once. Section 30, this is owner, this is tenant. This is how you're going to revise a day before examination. Okay. In section 30 for owner, there is rates and tax, there is repair, there is insurance. But for tenant, there is extra expenditure, that is rent also. Are you clear? Now, if an owner is incurring capital expenditure, then it is allowed to him as a deduction. Okay. He will add to the cost of capital. He can claim depreciation. And for tenant, it is deemed owner of the building and he can also claim depreciation. Is it clear? And rates and taxes will be allowed on payment basis. Is everyone clear with this? Please tell me. So now let's go ahead with the next section, that is section 31, which talks about plant, machinery and furniture. If you do any repair or if you pay any insurance premium for plant, machinery and furniture, repair and insurance of plant, machinery and furniture, it is allowed as a deduction. Okay. Say for example, I am doing some repair to my AC, to my car, to my computers, okay, to my furnitures. So all those repairs and insurance will be allowed as deduction under the income tax law. Are you clear? Again, there are 2 points to be kept in mind over here. First, the repair has to be a revenue repair, not a capital repair. If it is a capital repair, then it is not allowed as a deduction under section 31. Only revenue repairs are allowed as deduction under section 31. Are you clear? Second, if you take plant, machinery or furniture on rent, Suppose I have taken some plant and machinery on rent or furniture on rent, then rent is not allowed as deduction here. This section does not cover rent of plant, machinery, furniture. It only covers what? Repair insurance of plant, machinery and furniture. Then what about rent of plant, machinery and furniture? You may get the deduction under 37(1). What is 37(1)? That is under which section? Under the general deduction. Are you clear? Please tell me. So for rent, you can claim the deduction under section 37(1). General deduction, you can claim, there is no harm in that, okay? But in this section, you are not going to get, okay? So after section, as I have told you, these are small sections. So after section 30 and 31, 32 we have already done, okay? 33 we are going to do after some time. 34, because 33 is a sector-wise deduction. So we will do that along with sector-wise chapter. 34 is omitted from income tax law. There is nothing like 34 under the income tax law, okay? There is nothing like 34. And 35 is also what? Sector-wise deduction. So 33 and 35 we are going to do in the next chapter, next part of this chapter. So right now we are talking about section 36 now. Pay attention please here, Palani. Section 36, subsection 1. So in this section there are lot of clauses, around 17-18 clauses are there. Section 36, 1(1), 1(2), 1(3), 1(4), 1(5), 1(6), 1(7), 1(9), 1(15), 16, 17, 18. So section 36 subsection 1 is the main section, and in that there are lot of clauses, okay? Lot of clauses are there. So let's talk about all of them one by one. The first one is section 36 subsection 1 clause 1. So now if you are paying any insurance premium for securing your stocks, for what purpose? For securing your stocks against damage, destruction, okay, against floods, okay. So in that case, you are going to get the deduction over here, okay. So insurance premium paid against risk of damage of stock, it will be allowed as deduction. See how beautifully the law is drafted. Pay attention, please. Section 30, you are insuring your building. Section 31, you are insuring your plant, machinery, furniture, okay. Now section 36, 1(1), you are insuring your stock, okay. After that, in the next section, section 36 subsection 1 clause 1(b), here I am an employer, you are an employee, and I am paying premium for your health. I am paying health insurance for you, okay. I am paying medical insurance for you. So that deduction also I am going to get, okay. Now I am insuring people, not asset, not stock. I am insuring people now, employees. So that is also allowed under the income tax law. But the only condition in this second deduction is it should be other than cash. Just check it here. It should be what? Please tell me.
And cash.
Other than cash. Are you clear? Please tell me. It cannot be in cash. So if an employer is paying health insurance for the employees, it has to pay by other than cash. Is it clear to all of you? Please tell me. Third section over here. These are on one-liners. All of them may come in your examination in the form of an adjustment, and you should be able to answer them whether it is allowed or not allowed under the income tax law. As simple as that. Okay. Now the third deduction. Bonus or commission to employees. Bonus or commission to employees, that is also allowed as a PGBP deduction. But here also there is one condition, and that is it is subject to 43B. If it is subject to 43B, it means what? You have to pay that particular deduction. Okay. If the bonus and commission is paid to the employee, then it is allowed. If it is accrued, then it is not allowed. Okay. So bonus or commission should be paid to the employee on accrual basis. It won't be allowed to the assessee. I hope it is clear to all of you. Is it clear? Now, there is one line over here which is very, very critical, a technical line. Listen carefully, all of you. However, where sum represents profits, sum represents what? Profits, then not allowed. Now, what do I mean by this line? However, where sum represents profit, then not allowed. Okay. To explain this line, I have to take one example in front of you all. Pay attention, please, all of you. Now, what is that example? This line has been put for private companies. Private companies were doing some tax evasion under the income tax law. So to stop that tax evasion, the government has brought this line that the bonus and commission should not be what? Where the bonus and commission represents profits, then not allowed. Okay. Where such sum represents profits, then not allowed. Now, what do I mean by this line? Let me give you an example. Suppose there is a private company over here in which there are 4 shareholders, A, B, C and D. Okay. Now, the percentage of shareholding of all 4 of them is 25%, 25%, 25% and 25%. Okay. But now, out of the 4 shareholders, the third and the fourth one, these two are also the employees of the company. Okay. These two are also what? The employees of the company. And the first 2 are not employees. The first 2 are only the shareholders. Okay. Now, the time has come to pay them dividends. Okay. So, I am paying them dividends now. So, I am paying 25,000 to the first person. How much dividend should I pay to the other 3? Same amount. Correct? So, I am paying 25,000 to the second person also. But when I came to the third person, see here, I am paying only 5,000 to the third person and 5,000 to the fourth person. Okay. And the remaining 20,000 I am showing them as a bonus because they are also employees. Okay. So, I am diverting my profit over here. Okay. Instead of showing 25,000 rupees as what? As a dividend, I am showing 20,000 as bonus. Now, this 20,000 which you are paying as a bonus now, that is a distribution of profit. Do you agree or not? Please tell me. Please tell me. This 20,000 and 20,000 which you are giving to C and D, is it not a distribution of profit to the shareholder? Are Palani, answer.
Yes, sir.
That is not allowed. Your bonus cannot represent your profits. Are you clear? If you are giving bonus instead of distribution of profits, if you are giving bonus instead of dividends, then that bonus cannot be allowed as deduction. Okay. Yes, if you would have given 25,000 and 25,000 as dividend to C and D, okay. If you would have given 25,000 and 25,000 as dividend to C and D, and then if you would have given bonus, okay, then that bonus would have been allowed. Are you clear?
Yes, sir.
The moral of the story is, if there are 4 shareholders, all of them are equal shareholders, then every shareholder has the right to get same kind of what? Dividends. You cannot show lesser dividend to employees and divert that money towards what? Please tell me. Towards bonus. Then that will be disallowed under the income tax law. Is it clear to all of you? Please tell me. Okay. So this is what this line means. However, where sum represents profits, then what? Then it is not allowed under the income tax law. Okay. So this is what these few sections, small sections are all about. Now we are moving ahead to something bigger, which is very, very important for exam also. And which is one of the most important deduction in practical life also. Without this deduction, nobody can do business. Nobody. A business in India is impossible without this deduction. And I am talking about interest on loan, which is given under section 36, subsection 1, clause 3. Pay attention, please, all of you. Interest on borrowed capital. So if you have taken any loan for the purpose of business and profession, you will get the deduction. Okay. Sir, what conditions I am supposed to fulfill over here to get this deduction? Very simple, nothing great. There are very few conditions that you have to fulfill. So listen carefully. It's a good section. I should take loan. Okay. I should use that loan for the purpose of business and profession. Okay. And I should pay interest on that. Okay. I will get the deduction. Sir, what do you mean by the term interest, sir? Interest includes what, sir? Is the term interest defined under income tax law? And the answer is yes. The term interest is defined under income tax law in section 228A. Okay. So it is specifically defined under section 2. Sir, what does it include? Listen carefully. The definition says that interest means any kind of interest payable on money borrowed. So interest includes any kind of interest on money borrowed by whatever form. You are borrowing by loan or debenture or any kind of form. Okay. Further, it also includes any other charges in relation to money borrowed. So interest not only includes interest, but it also includes any other charges in relation to money borrowed. For example, I have borrowed a money and on that loan, I am also paying some other charges like processing charges. Do we pay processing charges on taking a loan? So that is also a charge in relation to money borrowed. Yes or no? So that is also interest under the income tax law. That also comes under the definition of interest. I hope it is clear to all of you. So interest will also include interest and it will also include any other charge in relation to money borrowed. Are you clear? Please tell me. Now coming back to my original discussion. The law says that the money should be borrowed and it should be used for the purpose of business and profession. Okay. Now what do I mean by use for the purpose of business and profession? So I am asking you some examples. You please try to answer me. Suppose I have taken a loan and I am using that money for paying salary. Will that be allowed or not? And the answer is yes. Why not? If I am paying salary to my employees by taking loan, it is used for the purpose of business and profession. Suppose if I take a loan for paying rental of my properties, which I am using for business, then is it allowed or not? Why not allowed? Definitely it is used for the purpose of business and profession. So the phrase business and profession is very wide enough to include lot of things. Suppose now I am asking you some questions. One more question I would like to say myself and then I am asking you all one question. Suppose if I took a loan for buying a property, a fixed asset, plant, machinery, furniture, building, then what will happen? That treatment we have already done in depreciation. So if I take a loan for fixed asset, what will be the treatment? Till the time the asset is not put to use, capitalize. And once the asset is put to use, you can claim it as a revenue expense. Have we done or not? Please tell me. Tell me please.
Yes, sir.
Yes, we have done already that. So now I have some question to you all. All of you think please, all those who are listening to the recording also. If I take a loan for paying income tax, will I get the deduction of that interest? What do you feel? Niveda?
No, sir.
No? Why? Why? Because income tax is a personal tax. Okay. Income tax is which tax? Tell me please fast.
Personal.
It's a personal tax. Income tax is not a business tax. The second name of income tax is personal tax. Income tax is your personal liability. Income tax is not because you do business, income tax is coming. Income tax can come on any activity, not only on business. It has nothing to do with business. Even if you don't do business, you earn salary or house property or other incomes, you have to pay income tax. Therefore, always keep in mind, income tax is considered to be a personal liability. And if you are taking a loan to discharge a personal liability, then that loan interest cannot be allowed as deduction. Is it clear? Now, what if I take a loan? Second question. What if I take a loan to pay what? To pay GST. Whether that will be allowed as deduction, please tell me. I am taking a loan to pay GST.
No, sir.
I want your opinion, please. Palani, Niveda,
Sir.
what happened? Say something. I took a loan to pay GST. Tell me fast, yes or no, one answer.
No, sir.
And the answer is yes. Why? Because GST is a business liability. It's not a personal liability. GST does not come out of personal things. GST will only come if you do some or the other business activity. Either you have to manufacture, it is a business activity, or you have to sell, it is a business activity, or you have to provide service, it is a business activity. So if you take any loan for payment of GST, then it is allowed as deduction. Just think, just go backward and think like this. Is income tax as an expense allowed under PGBP? No, not allowed. Okay. Is GST as an expense allowed under PGBP? Tell me. Yes, it is allowed.
Yes.
It is allowed. You can debit GST to your PNL if you have credited in your sales. If you have what? If you have included in the sales GST, then you can debit it. But income tax you can never debit. Why? It is not allowed. Why GST is allowed as a deduction? Because it is a business liability. So any loan taken for payment of GST is allowed. These are extremely important discussions for exam. You will get every second paper in which you will get such adjustments. The assessee has taken a loan for payment of GST. The assessee has taken a loan for payment of income tax. Give the treatment accordingly. Are you clear? Please tell me. Now one last thing over here, pay attention please. There was an assessee by the name called as SA Builders. Okay. Now what did the assessee did? Listen here. This is assessee's balance sheet. An assessee took a loan, 10% loan of say 10,000 rupees. Okay. So assessee took a loan of 10%, 10,000 rupees loan. Now out of this 10,000 rupees, assessee has given 6,000 rupees to, assessee has diverted 6,000 rupees to sister concern. Sister concern means it's subsidiary, you can say, okay, or it's a related party. So it's just like that I took a loan of 10,000 rupees and I gave 6,000 rupees to my related party, okay. So now what did the assessing officer said? See here please, the assessing officer said that I will disallow the proportionate interest. What will I do? I will disallow proportionate interest because you are diverting your funds to what? Sister concern. Are you clear? Now the matter went to the court. And the court said that, the Supreme Court of India said that in the case of SA Builders Limited, that every diversion does not amount to tax evasion. You cannot just measure everyone with one yardstick. You cannot say just because the assessee has diverted 6,000 rupees to sister concern, it means assessee's intention is to evade tax. You have to check the commercial expediency of the transaction. Why this transaction is done. You have to check whether the sister concern is using the money for personal purpose or for the purpose of business and profession. You have to check how closely the assessee and sister concern are deeply connected to each other. So if giving money to the sister concern is necessary for the business, it is going to help the business, and the sister concern is not using it for the personal benefit of directors, but it is rather using for the larger purpose, that is for the purpose of the business, of the group, then it shall be allowed as deduction. So the court has said that diversion does not mean tax evasion. Every diversion has to be minutely observed and has to be checked whether the tax has been evaded or not evaded. You cannot just say because it is diverted, I will not allow you the deduction. That is wrong. Are you clear? Please tell me. Please tell me. So these are some of the few things which are there in this particular what section. Okay. Now I will just try to do some more things over here because there are few things that I would like to speak over here. Pay attention please all of you. And I have some questions to all of you with respect to this section. That is section 3613. Pay attention on the board please all of you. This is your section which is on page number 3.3. Now pay attention please. I have some more questions that I would like to discuss with you all. So to claim deduction under section 3613, you have to do few very simple things. You have to take a loan, you have to use that loan for the purpose of business and profession. That's it. And you have to pay interest. Okay. Now my question to all of you is, Suppose I have already taken lot of loans. Lot of loan is already taken by me. Okay. And now I am taking another loan. Okay. Already I am into total debt. Now one more debt I am taking. Can the assessing officer tell me why are you saying taking so many debt? What is the need? Already you have so much debt. Now if you take any debt now, new debt, I will not give you the deduction of interest. Can assessing officer tell me that? Please tell me. What do you say?
No, sir.
No, sir.
He cannot tell me this.
No, sir.
No, sir.
Taking debt, not taking that is my decision.
Yes, sir.
Absolutely businessman decision.
Yes, sir.
Yes. Assessing officer cannot interfere into my day-to-day business activity. What is his duty? His duty is to check whether I am using the fund for the purpose of business or not. How much fund I am raising? Who are you to tell me? You cannot tell me all these things. Okay. This is the first thing that you have to keep it in mind. Second, suppose I have taken the loan at a very high rate of interest as compared to market. Can the assessing officer tell me, no, I will not allow you. Because you have taken the loan at a very high rate of interest, I am not going to allow you the deduction. Can the assessing officer tell me that? Please tell me.
No, sir.
Again, no. I am taking loan at a very high rate of interest because I might not be getting at lower interest. If I am getting at lower rate of interest, why will I pay more interest? I am mad or what? To pay more interest. There might be a situation. I may not have that credit worthiness. I may not have that CIBIL score to get rate of interest at a lower rate. So again, assessing officer cannot question your rate of interest. Okay. Third, what if I took a loan from a related party and I paid extra interest? Then assessing officer can question or not? I have taken loan from my related party and now I am paying more interest, more than market value.
Yes.
Now assessing officer can question or not?
Yes, sir.
Are there specific provisions to cover that? You have
Yes,
learned in
sir.
CA Inter, yes or no?
Yes, sir.
Excess payment made to relatives are disallowed or not? Please tell me now.
Yes,
Yes,
sir.
sir.
Have you learned or not that somewhere?
Yes, sir.
Forgot, okay. So any payment in excess of fair market value is disallowed under the income tax law. Okay. Where it is covered under section 40A. Which section? Under section 40 capital A. Is it clear all of you? Please tell me. Now, some important things which I have discussed just now with you all. Interest on loan taken for payment of what? Tell me fast. Income tax is not allowable. Are you clear?
Yes, sir.
Are you clear?
Yes, sir.
Then, acha, what about litigation expenses? What do you feel? Litigation expense. Litigation.
Related to business.
Related litigation expenses, is it allowed under PGBP? Yes, it is allowed. Okay, if I am incurring some litigation expenses, okay, that will be allowed as deduction. What about tax audit fees? That is allowed. Tax audit fees? Audit fees of a chartered accountant?
Yes, sir.
Definitely allowed. Okay. You would have made a provision in your office for your client. Yes or no? Audit fees.
Yes, sir.
Do you claim or not the deduction? Definitely we claim the deduction. Okay. Audit fees is allowed as deduction. Don't worry. Okay. Now coming to this case law, I would request all of you to go through this case law. Very important case. Very beautifully written over here. That what exactly has happened in the case. Okay. Page number 3.3. Fast. All of you. Have you read it? So what have you learned out of this paragraph? That every diversion does not amount to what? Tax evasion. Okay, you have to look into the facts and circumstance of every case. The court has held that. Yes or no? Please tell me. Further,
Yes, sir.
the holding company might have a deep interest in the subsidiary, right? Like, let me give you one example. Suppose Reliance Industries is there. See here, please. Reliance Industries is the parent company. And Reliance Infocom is a subsidiary company. 100% subsidiary under which Jio runs. Now, suppose Jio wants some loan. Okay. So, Jio doesn't go to market and ask for the loan. It is the Reliance Industry who go to the market and ask for the loan. Reliance Industry take loans from the banks and then give that loan to whom? To Jio. Because Reliance or Jio are deeply interested in each other. Therefore, the assessing officer will start to disallow the interest in the hands of Reliance Industry. The answer is no. He has to look into the circumstance of every case. Okay. Only then he can decide whether an expenditure will be allowed or it will not be allowed. So I hope it is clear to all of you. Is it clear? Please tell me.
Yes, sir.
Okay. So now after section 36(1)(3), the next section is, pay attention on the board please all of you. That is section 36 subsection 1 clause 3A. What is this section, sir? It's a section on discount on zero coupon bond. So this talks about discount on zero coupon bond. What is zero coupon bond? It's a bond issued by a company to raise funds. Suppose I am a company, I want to raise funds from you all. You are my investors. So I want to raise some money from you. So I will give you a zero coupon bond. And you will give me the money, on which I am not going to pay you any interest. No interest will be paid till maturity. So what I will do, I will issue the bond to you all at discount. Suppose the bond is of 100 rupees, I will issue you at 50 rupees. Okay. And on redemption, I will give you 100 rupees. I will redeem at par. So it's a bond where the company will issue the bonds at discount and will redeem at par, and therefore the differential amount will be the expense for the company. Yes or no? Let me give you an example. See on the board please all of you. Suppose this is the company A Limited. Okay. Today is 13th of September 2024. Okay. I am issuing 10,000 bonds today. Zero coupon bonds. The issue value of the bond is, I am issuing at rupees 50 per bond. The life of the bond is say 5 years. So the redeemable date after 5 years will come to 12th of September 2029. Is it clear? And the redeemable value at which I am going to redeem it, it is 100 rupees. Okay. Okay. So today, I am a company, you are an investor. How much money you are going to give me today in totality? In totality, you are going to pay me 5 lakh rupees. Okay. 10,000 into 50. How much I am going to pay you after 5 years? 10 lakh rupees. Correct? Therefore, the differential amount, is it a cost or not for me? Tell me now, please. That discount which I am giving you, how much discount I am giving you? Rupees 5 lakhs. Okay. Is this a cost or not for me? For the company. Company is receiving 50 today. Company has to pay 1 lakh, 10 lakh after 5 years. So 5 lakh rupees is the cost for the company. This discount is my cost. So the government is giving you the deduction of this discount. Okay. Because it is your cost. And the government is saying that you can take this as a deduction over the life of the bond. So tell me by how much I should divide? So as a student, you will say 5, sir. If I divide this by 5, okay, I will get 1 lakh every year, correct? And tell me now. I'll get 1 lakh every year.
Yes, sir.
Then I will make a blunder. It is a big mistake, okay? This mistake we should not do. Listen carefully. Why? 1 lakh every year. If you count from year, listen, till year, there are how many financial years?
Financial years.
How many, Vishnupriya? 5 or 6? I am not able to see your hand. Okay, you are showing it to yourself like this. How will I see? Okay, you have to show like this. How many? How many financial years are there? 6 financial years are there. How will I divide 6 financial years, 1 lakh rupees? Will it not exceed the amount? Yes or no? So there are 6 financial years. First financial year is previous year 24-25. Correct? Then 25-26. I'll write all of them. 26-27. 27-28. 28-29. And then 29-30 is also there partly. Yes or no? So I cannot divide 5 lakh rupees by 5 years. So the government has said that divide this by months. Divide this by what? Total number of months. Okay. Don't divide it this by what? Total number of year. Divide by months. Now listen carefully. Now while calculating the month, the law says one more thing. Listen carefully. That in a particular month, listen, this is the most important point. In a particular month, if you have issued the bonds for 15 days or more, if you have issued the bonds for 15 days or more, take it as that as a complete month. Okay. So by that logic, we have issued the bond on 13th September. Okay. So in September, have we issued the bond for 15 days and more? Yes. From 13th September to 30th September, it is 18 days. Yes or no? So September 2024, we are going to count because it is 15 days or more. October, November, December, Jan, Feb, March. So in first year, how many months are there? Please tell me. 7 months. Are you clear? Now in second, third, fourth and fifth year, it will be 12 months, 12 months, 12 months and 12 months. And in last year, how many months it will be counted? April 29, May 29, June 29, July 29, August 29. What about September 29? It is not issued for 15 days or more. It is for only 12 days in September 29. So we have to ignore September 29. Okay. So this will be 5 months. Okay. If I total the number of months, it comes to 60 months. How many months? And therefore, per month data will come to 8,333 per month. Okay. And now I can multiply 8,333 every month, every year. Okay. With the relevant months. Did you understand? And now if I total, it will not exceed 5 lakh rupees. It will be exactly 5 lakhs. Is everyone clear with this? Please tell me. Sure.
Sure, sir.
So this is what this small deduction is all about. Nothing great as such. Not very important. This one, previous one was very important. This one they have not asked much in the examination. Okay. So you come to the textbook now, please all of you. And there is one illustration based on this over here on page number 3.5. Please get me the answer of this illustration. All of you, please. Okay. Done or not? Niveda?
Sir.
Okay. Vishni Priya, why don't you change the spelling of your name in Zoom? Huh?
Completing the class, I will change, sir.
Okay. Are you done with this question? Similar to what I have done on the board, right?
Yes, sir.
Correct or not?
Yes, sir.
So, shall we go ahead with the next one? Pay attention, please. So, after section 36, 13 and 13A, let's move ahead with the next deduction under section 36, which is, I can say, the most important deduction in the entire chapter. Very, very, very important. Pay absolute attention to what I'm going to say now. Okay. Now I'm talking about three deductions at a stretch directly. Three of them directly. That is with respect to employer's contribution to certain funds. Suppose I am an employer, you are my employee, and I am obligated to contribute a lot of things for you all. Okay, like I'm obligated to contribute to provident fund for you all, to gratuity fund for you all, to pension fund for you all. So I'm incurring a lot of expenses. Okay. So all those expenses which I'm incurring for you in the form of contribution, that should be allowed as a deduction to me. Yes or no? Please tell me. So there are three contribution of employer for his employees. I'm mentioning on the board one by one. Pay attention. Very important. Absolutely important for exam. See on the board. The first one is given under section 36, subsection 1, clause 4. This talks about employer contribution to recognized provident fund or to superannuation fund. So I am an employer, you are my employee. If I am contributing any amount to a superannuation fund or a recognized provident fund, not unrecognized, to a recognized provident fund, then it is allowed as a deduction to the employer. It is allowed as an expense. Is it clear? Please tell me. Shall I go ahead with the next one? Next one, 3614A. Employer contribution to approved pension fund. Approved what? Pension fund. Okay. So I'm contributing an amount to your pension fund so that on retirement you should get some money on pension. Okay. Then that is also allowed as a deduction to the employer. But here there is a cap. Cap means there is a maximum cap given by the government. Okay. Only that much deduction will be allowed to you maximum. Shall I say? It is 10% of salary. Okay. Maximum 10% of salary will be allowed as a deduction to the employer. Now you will ask me as a student, sir, in the CA interview we have learned salary chapter, salary differs in different sections, sir. For one section salary means something, for another section salary means something else only, and for third section salary means something else. Sir, what is the meaning of salary over here? Salary includes lot of components, na? Sir, what does salary includes here? Salary includes two things over here. Pay attention. One is basic salary. Which salary? Basic. Another is DA in terms. DA in dearness allowance in terms. These are the two things which will come in the definition of salary under this section. Are you clear? Please tell me. Now, very important thing. Listen carefully. Now, there is an amendment made by Finance Act number 2, 2024 in this section, which says that this cap is now increased to 14% now. How much it has been increased to? 14% from previous year 24-25, assessment year 25-26. Is everyone clear with this? Please tell me. So, suppose the salary is 10 lakhs, okay? And I am contributing 2 lakh rupees. So, how much deduction I will get? Only 1 lakh 40. 60,000 will be what? 60,000 will be disallowed. Is it clear all of you, Palani? Okay, so this cap has been increased by Finance Act 2024 now. Are you clear? So this becomes more important for the exam now. And the third and the last one. Section 36(1)(5)(a). Sorry, 1(5), not 5(a). This is employer contribution to, shall I say, approved gratuity fund. So if I am contributing any amount to gratuity fund, which is approved gratuity fund for my employees, that will also be allowed as a deduction to me. Is it clear, all of you? Please tell me. Please tell me. Nod, please nod your head, yeah.
Yes, sir.
If you don't want to say, okay. You can nod your head. It's okay. I'll understand from emotions. I don't want to listen your voice. Now, these are the three contributions that the employer is doing for you. Okay. And the employer will get the deduction. The middle one is subject to a cap. Okay. The first and the last one, there is no cap. There is no maximum limit. You contribute as much as you want, you will get the deduction. Okay. Now, one last thing I would like to say for all three of them, one common thing is there. Common. All of them are subject to 43B. What do I mean by that?
Actually,
You have to actually pay. Then only you will get the deduction. Okay. Sorry. So all three of them will get deduction on actual payment, not on accrual basis. Suppose I am an employer, I am saying that I will contribute to my provident fund. Will doesn't matter, doesn't work over here. Okay. You have to contribute. If you have paid from your pocket, then only you are going to get the deduction. If you have just passed a journal entry in the books of accounts, you are not going to get. Okay. Mere passing of an accrual entry is not sufficient to claim deduction over here. You have to pay it. So is everyone clear with these three deductions? Please tell me. Tell me fast.
Yes, sir.
sir.
So you can see these three deductions over here in your textbook. This is in green color, so you understood what it has to be, what it will mean to you. Okay. A green color means what? It's the latest amendment made by the Finance Act 2024. Okay. So check it please. Then I will go ahead. Shall I go ahead? Tell me. Pay attention. Now the next one is a beautiful one. Before that, I would like to just say one thing here itself, which I'll again speak when I'll teach 43B to you all. But right now also I would like to say something. We have learned certain expenses today especially, which are allowed on payment basis, like rates and taxes, correct? Like bonus and commission, correct? Like these three, correct? So these are some of the expenses so far. Many more will come later on, which are allowed on payment basis. Now what the question is, by when I should pay? What is the date of payment? So you can pay till the due date of filing of return. If you want to claim the deduction in the current year, you can make the payment till the due date of filing of return. Okay. So if I want to claim the deduction in 24-25, previous year 24-25, I can make the payment till the due date of previous year 24-25. Then also I will get the deduction. Okay. Now listen carefully what I am trying to say. Absolutely important. Suppose there is an employer here and there is an employee here. Okay. This is previous year 24-25 which is going on. Now, suppose for this previous year, I am paying a salary of rupees 1 lakh per month to my employee. Okay. And we have a policy that for April 2024, we pay salary on 5th of next month. This is the policy of the company for every month. Okay. Every month the salary will be paid on the 5th of the following month. Okay. Now suppose I have opened a recognized provident fund account for my employee. Okay. Now suppose in this recognized provident fund I am contributing my contribution 5,000 rupees per month. So my first question to all of you, will I get the deduction of this as a PGBP expense? Please tell me. Tell me fast.
What is the
Under which section?
36?
In 3614 I can claim that as my deduction. Okay. And it's very simple, na? It is my contribution. I will take that deduction. But there is one more thing which goes to this RPF account. What is that one more thing? That one more thing, yes, which goes to this RPF account is the employee's contribution, which I will deduct from his salary. Yes or no? Say 5,000 rupees I have deducted employee's contribution. That also will go to the RPF account. Correct or not? Please tell me. Are you clear? Now, what does the law says? Listen carefully. Very, 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 very important. Pay attention, please. Very, very, very important. Sir, what is so important over here? Pay absolute attention. Suppose I'm making a small P&L account. Can you please tell me on which date I'm deducting the employee's contribution from the employee's salary? On 5th of May, correct? The law says that, listen employer, the day on which you are deducting from the employee's salary, employee's contribution, your employee's contribution, that will become your income. You have to add that to your income. Okay, listen carefully. What is this income? This is employee's contribution. This will be considered as your income. Sir, how the hell it is my income, sir? I am just deducting. How it can become my income? The law has defined under the definition of income section 224(10) that it is an income. Then you have to consider that as an income. You don't have any option. But sir, how come it is an income? It is not my income. I am just deducting. I will pay it. But on the date of deduction, you have to consider that as an income. But why, sir? Is there any logic? Logic you will understand in the next 5 minutes. After deducting on 5th of May, the law says that you have to pay as per the provident fund due date. Sir, what is the provident fund due date? The provident fund due date is 15th of the following month. Okay. That is, you have to pay this by 15th of May. By which date you are supposed to pay? 15th of May. So, if you pay by 15th of May, then you can claim that as a deduction of 5,000 rupees under section 3615A. And the moment you will claim a deduction, this 5,000 will get nullified. Yes or no? So what is the logic behind first making an income and then claiming a deduction? The logic is very simple. The government want the employer to be very proactive. The government want that the employer, if he is deducting the money of the employee from his salary, he should deposit that as soon as possible. Now please tell me, if you are an employer and on 5th of May, 5,000 rupees is becoming your income on deduction, will you be in a hurry or not to deposit that? Please tell me. Will you be in a hurry or not to deposit that money to the fund? So you have to deposit this money by 15th. Sir, what if I deposit this on 16th? Then you will not get the deduction. Even a day of delay is not acceptable under law with respect to employees' contribution. And that's now I'm comparing. Listen carefully. I am employer. I am making two payments to the fund. One, my own contribution. Yes. One, employee contribution. Own contribution is subject to 43B. And if own contribution is subject to 43B, own contribution I can make the payment till the due date of filing of return. Okay. But employee's contribution, you have to make the payment by 15th of the following month. Even a day of delay is not allowed. Is everyone clear? Please tell me. So, what is the due date to, what is the date to pay employer contribution? You can pay till the due date of filing of return. You will get the deduction under PGBP. But if you want the deduction of employee contribution, by when you should pay? You should pay by 15th of the following month. Is everyone clear with this? Please tell me. So this discussion is mentioned over here. You can read this entire paragraph at your end once. Okay. Then we'll go ahead. Okay. Now there are some small deduction, one or two small deduction that I would like to address you all first of all, and then I will go ahead with some important deduction under section 36. One is very small deduction over here, which is allowances for animals, which is used for the purpose of business and profession. Okay. So I am buying some animals for my business, but keep in mind one thing, that it is not an SIT. I am not buying that as a stock in trade. Okay. If I am a dealer in what? In animals, then whatever animal I will buy, that will my purchase. Okay. If I am a dealer in animal, I buy and sell animal. Okay. Then whatever animal I will buy, that will be considered to be my what? Purchase cost or not? Yes or no?
Stock, yes, sir.
As purchase stock. And I will get the deduction. This is not talking about purchases. It is talking about an asset. If you are buying animal as an asset, not as a stock. So for example, if I am buying some animal for transportation, okay. Say I am buying some, say camels to transport in desert, or buying some horses, okay, or buying some, say, dogs for security purpose, okay. Then in that case, I'm going to get the deduction over here. But how will I get the deduction? Listen carefully. It's a very strange kind of section. Suppose today I bought an animal for 30,000 rupees. So today, if I bought an animal for 30,000 rupees, I am not going to get the deduction today. Okay. The deduction is allowed in the year in which the animal become either useless or it is dead. Say after 4 years, the animal has become useless or it has dead. So whatever money I will receive from the sale of the asset, from the sale of the animal. If it has become useless, I will sell the animal. If it has dead, I will sell the carcasses of the animal. That is the body of the animal. And suppose after 4 years, I realize 5,000 rupees out of it. Okay. At what cost I have bought it? I have bought it for 30,000. And at what price I am selling it? I am selling it for 5,000 rupees. So you will get the deduction in the year of sale, not today. And how much? I will get the deduction to the extent of the difference of the two. That is the cost minus the sale value. Check it, please. Okay. Are you clear? So the day on which the animal become useless, you will get the deduction of difference between the cost minus what? The sale value. That will be allowed as a deduction under PGBP to you all. Is it clear? Let's move on to the next section now, which is very, 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 very important section practically and academically at both level. That is section 36(1)(7), 36 subsection 1 clause 7. That is deduction of bad debts. Now see carefully over here, please, all of you. Now this section gives us the deduction of bad debts. Bad debts is a very important allowance, especially if you are following what? A mercantile system of accounting. In mercantile system of accounting, bad debts is a very integral part. In cash system of accounting, bad debts will never come. Okay, because you are recording the revenue on cash basis. Yes or no? So bad debts will not come in cash basis. But when you are following the mercantile system, bad debts will definitely come. So will I get the deduction of bad debts? Yes, you will. You have to fulfill two conditions. First, condition number 1. The bad debts must be written off in books of accounts. And you have to write off the debt in the books of accounts. Okay. So that bad debt should be shown in the P&L account debit side. That it is written off in the books. Is it clear? Second condition. The bad debts must be taken into income earlier. Okay. So the bad debts must be taken into income earlier. Let me give you an example of these two conditions. Suppose this is previous year 21-22. This is my trading and P&L account. This is my balance sheet. Now I have sold some goods. So I'm passing a journal entry, credit sales 1 lakh to debtors, and in the balance sheet debtors are there of 1 lakh rupees. Okay. Are you clear? Now suppose after some years, this debtor has become bad. Say in P&L account in previous year 24-25, the debtor has become bad. And now I want the deduction of this debtor. I want the deduction of these bad debts. I have to fulfill two conditions. Condition number 1, I have to write off the debt. So I have to pass an entry to bad debts. Are you clear? And the second condition, I have already fulfilled. How? This debt, was it taken into income earlier year? Please tell me. Was it taken into income year? Yes, it was taken. So this is what the law says. Law means when you say you have to fulfill two conditions. That is condition number 1, you have to write off the debt in the books of accounts, and condition number 2, the debt which you are writing off should be taken into income earlier. Is everyone clear? Please tell me. So first of all, as a student, you should remember these two conditions always. Second thing, this section is only and only allowed for actual bad debts. It is not allowed for provision for bad debts. If there is a provision for bad debts like RDD, reserve for doubtful debts, or something like that, then this section will not take care of that. This section only take care of which kind of bad debts? Please tell me. Actual bad debts. Are you clear? Please tell me. Only actual bad debts are covered in this section. Provision for bad debts are not covered in this particular section. Okay. Third thing. Sir, is it to claim bad debt? Sir, is it necessary that I have to prove to the department that I have taken all the necessary steps to recover the money? Sir, am I supposed to prove to the assessing officer that I have followed back the customer, but the customer is not paying me the money? That is the reason I have taken the bad debts claim as deduction. Am I supposed to do all these things? The answer is a big no. The government has made an amendment in 1989 that with effect from 1/4/1989, around 35 years back, with effect from 1/4/1989, there is no need to prove that the debt has become bad. You have to just write it off in the books of accounts. That's it. You don't have to prove it to the assessing officer. If proving to the assessing officer becomes a condition, then there will be lot of litigation. Assessing officer will never get satisfied here. Okay. Because most of the assessing officers are corrupt. They are not going to listen to you. They will never ever be satisfied with your claim of bad debts. So the law has removed that condition that you have to prove it. No need to prove. Okay. You can directly claim. Just write it off in the books of accounts. Is it clear? You have to write off in the books of accounts. You will get the deduction. That's it. The matter is closed. Next. For banks and financial institutions, the government has given some relaxation, which is very much necessary. Listen carefully. Suppose this is SBI. Okay. And this is SBI's balance sheet. Suppose SBI has given a loan to our beloved Vijay Mallya. Okay. Of 10,000 crore. Now, we all know what Vijay Mallya has done. Okay. He has ran away. So, there is some interest receivable in the name of Vijay Mallya in the balance sheet of the SBI, say 3,000 crore. Okay. So, Vijay Mallya is supposed to pay 10,000 crore rupees loan and 3,000 crore rupees interest. Suppose. Vijay Mallya ran away. What suppose? He has really ran away. Okay. Is this bad debts or not for the bank? So, the bank wished to claim what? The deduction. How much is the bad debt for the bank? How much is the loss for the bank? 13,000 crores, correct? So when the bank is debiting 13,000 crore rupees to the P&L, the assessing officer is not allowing 13,000 crore. He's only allowing 3,000 crore. He's saying that, see on the board, this 10,000 crore was never taken into income earlier. Do you agree or not? The loan amount was not taken into income earlier. So you are not fulfilling condition number 2. Yes or no? But in logical terms, is that 10,000 crore also a loss or not to the bank? They deserve the deduction or not? Yes, they do. So for banking and financial institutions, money lending business, condition number 2 is not applicable for loan amount. Okay. So for banking and financial institution, condition number 2 is not applicable for which amount? The principal amount. Okay. So they can claim the deduction, but just by writing it off in the books of accounts. Are you clear? Please tell me. I hope it is clear to all of you. Okay. Next is a Supreme Court judgment of T. Veerabhadra Rao, K. Koteshwara Rao. Now, what does this Supreme Court judgment tells us? Pay attention, please, all of you. What has happened in this case? There was a company by the name called as A Limited, and there was another company by the name called as B Limited. Now, the A Limited sold goods on what? On credit. Okay. Later on, A Limited got amalgamated with B Limited. What happened? A Limited got amalgamated with B Limited. And therefore, this debtor was also given to B Limited. Okay. The debtor will also be transferred not to B Limited. Now, the customer is not paying the money to B Limited. Okay. The customer is supposed to pay the money, but he is not paying. So, can B Limited claim the deduction of bad debts or not? So, the Supreme Court said that the answer is yes, they can claim. Okay. Deduction of bad debts is deduction to a business. An assessee has acquired the business, and while acquisition of the business, has the assessee B Limited paid for that bad debts to A Limited in the form of purchase consideration or not? Please tell me. While acquiring the asset, you pay not to the other person for all the assets acquired. So, in case of an amalgamation or demerger or succession, the successor will get the deduction. Okay, don't worry about it. The successor is eligible to get the deduction. The AO cannot deny the deduction to the successor. Okay, I hope it is clear to all of you. So these are the points which are there in this section. There is one more point. I'm coming to that. First of all, I would like to show you all these points over here, and then I will come to that one last point. Okay. The first is deduction of actual bad debts. It is which bad debts? Actual, not provision. I've also mentioned over here the bad debts shall not include RDD, reserve for doubtful debts. Okay. Reserve for doubtful debts are not allowed over here. Second, you have to write off the debt in the books of accounts. Okay. Third, the debt must be taken into income. Okay. Fourth, for banking and money lending businesses, this condition is not applicable for loan amount. Okay. Understood or not? Next is the case law of T. Veerabhadra Rao, K. Koteshwara Rao. Okay. Is it clear? Now, one last thing is there in this particular section. Let me explain that first and then we'll go ahead. Pay attention, please, all of you. One last thing. See here. Shall I say? Now, there is one accounting standard AS9. Everybody might be knowing that. What is that AS9 accounting standard? What does it talk about? Revenue recognition. Now, what does revenue recognition accounting standard says? Revenue recognition accounting standard says that a revenue should not be recognized in the books of accounts unless there is a reasonable certainty that you will receive it. Agreed or not? Unless there is a that you will receive. Suppose I sell some goods to somebody of 1 lakh rupees. Now, I'm not certain about receiving it. Shall I recognize? I've sold some goods of 1 lakh rupees to somebody. I'm not sure about receiving it. Shall I recognize in the books of accounts or I shall wait? Wait. Similarly, I have provided some services to somebody. I'm not sure about receiving the money. Shall I recognize or wait? Arey, say na please.
Wait.
Wait till the time you are reasonably assured. Correct? Wait till the time you are reasonably certain that you will receive it. Okay. Now, because of this provision, the income tax is getting at loss. The income tax is facing losses. Why, sir? Say, for example, I am providing you services of 1 lakh rupees. And I am not certain about it. So I will not recognize. If I will not recognize, it will not come into income only. It will not come in PNL. And if it doesn't come in PNL, it will not be liable for tax. Yes or no? Say now, please. So the income tax has said that we will not follow revenue recognition anymore. And income tax has brought its own revenue recognition ICDS. See here, please. Income tax has brought what? Its own revenue recognition ICDS. But this revenue recognition ICDS is partially applicable. Not fully. It is only applicable to services. It does not apply to goods. Okay. It only applies to provision of services. It means what? Let me tell you. It means if you are selling a goods of rupees 1 lakh, and if you are not reasonably certain that you will receive it, you will not record. Okay? In accounts. What about tax? Even in tax, if you have sold goods of rupees 1 lakh and you are not reasonably certain about receiving it, you will not record. Same. The treatment for goods are same. But the treatment of services have changed. In books of accounts, in accounting system, in financial reporting, if you are giving a service of 1 lakh rupees to somebody, and if you are not reasonably certain that you will receive it, I have given the service, but I am not sure about receiving the money, don't record in the accounts. Okay? But in tax, the things have changed now. The tax says that if you have provided a service and there is no reasonable certainty of receiving it, still record and pay tax. It means what? It means under taxation system, for services at least, to recognize the revenue, reasonable certainty is no more relevant. The moment you have provided the service, record it. Whether it is reasonably certain or not certain, we are not interested. Okay. Now this treatment is only for services as of now, not for goods. For goods also they will bring after some years. Slowly and gradually they will expand the law, not suddenly. Now a problem arises. Suppose I have given some services of 1 lakh rupees to you, and there is no reasonable certainty of receiving it. First question, will you record in accounts? No. Will you record in tax? Will you pay tax? You have paid the tax. Okay. But have you received the money? No. But you have paid the tax. Correct? Suppose after a few months, you actually come to know that this money is bad. The debtor is died. Okay. You actually come to know that this money is bad, on which you have already paid tax over here. Yes? Do you wish to claim bad debts or not? Will you wish to claim bad debts or not?
Yes, sir.
Yes, why not? And if you wish to claim bad debts, which is the section that will help you to claim bad debts? 3617, correct?
Yes, sir.
And what is the condition you are going to fulfill? The very first condition you will not be able to fulfill. What is the very first condition over here? The bad debt must be written off in the books of accounts. Now the question is, how the hell I will write off a bad debts in the books of accounts, which is not recorded only in the books of accounts? Have I recorded that 1 lakh rupees service in the books? Then how will I write off that? Is it possible? So how will I get the deduction of that bad debts? So to overcome this technical difficulty, the government has brought one provision in 3617, which says that, listen carefully, if a income is recognized under tax, if an income is, repeat with me,
Income is
recognized under tax as per ICDS, as per, without recording in the books, without
Recording the books.
in the books. And if such income becomes bad, if such income
becomes bad.
Then it is deemed to be written off in the books of accounts. Then it is what?
Deemed to be written off in the book.
Deemed to be written off in the books of accounts, and you will be getting the deduction. Is everyone clear with this? Please tell me.
Yes, sir.
You can now read this 3 line, you will understand everything. Is it clear? So to explain this in great detail, I have put this entire discussion over here in page number 3.6 in very detail. I gave you 5 minutes to read this. This will further strengthen your concept, okay, about this ICDS. You can read it from here. See, wait, listen, read very carefully from here till here, okay. Have you read? Understood?
Yes, sir.
Okay, fine. Niveda, your electricity has come or not?
No, sir, not
Still
yet.
not come. Okay. So now let's go ahead with some small deductions. There are a few small deductions which are there. We will see all of them one by one. Okay. Shall we? The first one is hopeless deduction. Deduction for expenditure on promotion of family planning amongst employees. Okay. Which is given under section 3619. Now this deduction, first of all, it is only applicable to companies. Check. It's not applicable to other assessees. Have you seen any deduction so far which is only applicable to company? Have you seen any deduction in section 30, 31, 32 or 36? Please tell me. Any deduction have you seen which is only applicable to company? No. This is the first deduction which is only applicable to corporate assessee, not to everyone. Is it clear? Second, why this deduction is introduced is to create awareness amongst the employees that family planning is important, because overpopulation will lead to problem to the country. Okay. And that is the reason, to create awareness amongst the employees, this deduction has been brought by the government. Now, for that purpose, if the company is incurring a revenue expense to create awareness among employee regarding family planning, if the company is incurring what? A revenue expense. Okay. Then revenue expense is fully allowed. It is fully allowed. But if the company is incurring capital expense, what kind of expense? Capital expense. Then capital expense over here will be allowed in the form of 5 installment. It will be allowed in 5 equal installment. Okay, it will not be allowed in one shot. Are you clear? Please tell me. So the capital will be allowed in 5 equal installment and the revenue will be allowed what? Tell me. It will be fully allowed. Okay. Now one more important thing that I would like to discuss over here with you all. Pay attention please, which is this. Listen carefully. Suppose this is assessee's P&L. Okay. And there is sales over here. By sales. Shall I write? Say 100 lakhs is the sale. Okay. Now suppose there are some expenses over here. 2 expenses. Say 120 lakhs is the expense. Okay. Now suppose there are some depreciation over here. 30 lakhs depreciation. Okay. Then there is revenue expense of family planning. Say 10 lakhs. Okay. And then there is capital expense of family planning. Say this is 20 lakhs. Okay. So overall there is how much loss over here to the company? 20, 30, 50, 60, 80 to 80 lakhs loss is there. Is it clear all of you? Please tell me. Now what is the treatment of this loss? Out of this 80 lakh loss, 20 lakh loss is coming because of this. This will be treated like a business loss. Yes or no? I have told you this earlier now, while explaining UAD. Now, out of this 80 lakhs, 30 lakhs has come because of depreciation. Yes? So this will be specially treated as per UAD. Okay. Now let's talk about these two items, family planning expense. Now this 10 lakhs will also be treated like what? It will be treated like a business loss only. Okay. Because it's a revenue expense. Are you clear? But last but not least, this 20 lakhs, that is capital expenditure of family planning. Okay. This will be treated like UAD. It means any unabsorbed capital expenditure of family planning will be allowed to be carried forward for infinite number of years. And it can also set off against what? Any income in this world except salary income. Are you clear? Please tell me. So the unabsorbed capital expenditure of family planning can be what? Treated like what? Please tell me. It will be treated as good as unabsorbed depreciation. I hope it is clear to all of you. Please tell me fast. See here. See this note. Is it clear? Niveda, are you there? Shall I go ahead?
Yes, sir.
Next few deductions are there, small. After that, we'll move ahead with our next part, that is sector-wise deductions. Okay, that is a very big part. Now, the next one is 36(1)(15), that is securities transaction tax. If you purchase any shares, if you sell any shares, you are liable to pay securities transaction tax, correct? So, securities transaction tax will be allowed as a PGBP expense if you are a trader in security. Check. If buying and selling the security is your day-to-day business, okay, then STT will be allowed as a deduction. Sir, I do not buy shares and sell shares every day. I am an investor, sir. I am a long-term investor. So then your income will be classified under capital gains, correct or not? Please tell me. And under capital gains, you don't get deduction of STT. I hope you know that. Even if you don't know, see here in the bracket. Under capital gains, what? You don't get the deduction of what? STT. But if you're a trader in security, then you are eligible for what? Claiming deduction of STT. Is it clear to all of you? Please tell me. Please tell me. So, similarly, commodity transaction tax. Commodity transaction tax is imposed on purchase and sale of commodities, which are available in MCX. So, if you buy any commodity, sell any commodity, the way you buy shares and sell shares, the same way there is a commodity market. Yes or no? So, there if you buy commodity, sell commodity, you have to pay commodity transaction tax. Again, it is allowed as a business expense, provided you are a trader in commodity once again. Is it clear, all of you? Please tell me. So, if trading in commodity is your day-to-day activity, that is your PGBP, then the commodity transaction tax will also be considered as a PGBP expense. Are you clear? Please tell me. Next, last two small deductions, not very important for exam, but still it is there. So, we have to do it. 36(1)(17) is only applicable to cooperative society. Okay. The way 36(1)(9) was only applicable to whom? Companies. This section is only applicable to whom? Cooperative societies. So, what is this section all about? Pay attention, please. Pay absolute attention. Suppose I am a cooperative society and I am buying some sugar cane. What am I buying? Sugar cane. For manufacturing of sugar. For manufacturing sugar. Then the government says that if you are buying some sugar cane for manufacturing of sugar and you are a cooperative society, then you should buy at a price which is equal to or less than the price fixed by the government. You should not buy at a very high price in the black market. Okay. So, if you buy at a price which is fixed by the government or you are buying at a lesser price, it will be allowed as a deduction. If you are buying at a very high price from black market, where it is sold at a very high price, then we will not allow you the deduction. Is it clear to all of you? Please tell me. You should buy at a price equal to or less than the price fixed or approved by the government. So, if the government is fixing the price of say 1000 rupees per kg, you should buy at 1000 or lower than that, not more than that. You cannot buy at 1200 or 1500. Then it will not be allowed as a deduction. Is it clear to all of you? Please tell me. Are Palani, why are you making such faces in life? Make happy faces.
Sir, when I can buy 1000, why should I buy 1500, sir?
If it is not available, then you may go to black market and try to promote that. Okay. That's the reason the government is saying, yeah, don't do that. Directly buy from the farmers at a price which is fixed by the government. Why do you want to promote black marketing? Okay. Because in all these things, there are a lot of hoardings. Hoardings happen by the middlemen. And middlemen try to hoard the things and try to create shortage in the market. Okay. And they try to inflate the price. So the government is trying to discourage that. Okay. So that nobody should buy at a higher price. If any black marketer is offering you the sugarcane, you should ignore that. You say, I will not buy, I will not get the deduction under PGBP. Okay. Is it clear? And one last deduction over here. After that, we'll move on to sector-wise deduction. One last deduction over here is deduction of mark-to-market loss. Mark-to-market. Now, what is mark-to-market loss? Let me explain you. What is mark-to-market loss? 36(1)(18). 40(a)(13). This is C. This is deduction. This is disallowance. Okay. There are two sections with respect to mark-to-market loss. One section talks about deduction. One section talks about disallowances. Pay attention, please, all of you. Now, mark to market. What is mark to market? Anybody knows what is mark to market loss? Any idea about what exactly mark to market loss means? You all are CA final students. You all have done your group 1. You all have at least done your group 1 studies. You all are done with AFM. Not done. Now you will say this only, no. If you don't know the answer, also no. Right or not, Vishnu Priya? Vishnu Priya. I will say your name by the what it is written. Unless until you change it. No. Vishnu Priya. Okay.
Sir.
I will say whatever I'm seeing here.
Yes, sir.
Okay. Palani, what is mark to market loss? No idea. No idea. Niveda, what is mark to market?
Sir, we are buying securities in the exchanges. We have to settle the gains on daily.
Excellent. Niveda has given the answer. We are buying some shares, etc. in the stock market. So we have to recognize the gain or loss on every daily basis. Okay. Daily basis. Say I'm buying shares of Reliance Industry. Every day I have to check out the price. If it has increased, I have to recognize the gain. If it has reduced, I have to recognize the loss. I have to mark my investments as per the market. What am I supposed to do? I have to mark my investments as per the market. This is known as mark to market loss. So mark to market loss will be allowed as a deduction or not? That was a lot of doubt in the assessee's mind. So the government of India clarified by giving this section 36(1)(18). The government said that the mark to market loss here, Palani, the mark to market loss will be allowed as deduction provided it is computed as per ICDS. If it is computed as per ICDS, we will allow you. If it is not computed as per ICDS, we will not allow you. Okay. So if it is computed as per the income computation and disclosure standard, it will be allowed under 36(1)(18). But if it is not computed as per ICDS, it will be disallowed under 40(a)(13). That's the reason the government has made 2 sections. One for deduction and one for what? Please tell me. Disallowances. Okay. So this is what this small section is all about. So what all things we have seen in this chapter? Section 30, rent, rates, taxes and insurance of building. After that, repairs and insurance of plant, machinery, furniture. After that, insurance of stock, insurance, health insurance of employees, then bonus and commission, correct? Then interest on borrowed capital, then zero coupon bond, then employer-employee contributions, then allowance for animals, then bad debts, then family planning, then STT, then CTT, then sugarcane purchase for cooperative society. And the last one is mark to market loss. Is it clear to all of you? Please tell me. So this is where we stand as far as our specific deductions are considered. Okay. So now we are done with all the specific deductions which are applicable to all assessees. Okay. So now we are left with what? The sector wise deductions. Is it clear all of you? Please tell me. So after all the specific deductions which are available to all assessees in general, let's move on to the next part, which is a big part, and that is sector wise deductions. Okay. So today we are going to see some of the sectors which are getting some great benefits under the income tax law. And the very first sector that we are seeing today is covered under section 33AB. Very important section. Okay. Now what is this section? This section talks about if you are engaged in growing and manufacturing tea, coffee or rubber in India. Okay. So if you are engaged in growing or manufacturing tea, coffee or rubber in India, 3 items. What are you supposed to do? You are supposed to grow also, you are supposed to manufacture also, you are supposed to do both the activities. Only growing is not sufficient. Only manufacturing is also not sufficient. You are supposed to be engaged in the composite activity of both of them. Okay. So if you are doing that, you will be going to get great benefits over here. What is the great benefit over here, sir? The great benefit over here is that you will get the deduction in the current year, whereas the expenditure you can incur in future years. Okay. For example, the current year is financial year 24-25 for our exams. So you can claim the deduction in the current year. Okay. You can claim the deduction in the current year. But the expense you can incur, say in 27, 28. So the government is giving you deduction on a preponement basis. They are preponing the deduction. Okay. By default, whatever we have learned so far, you will get deduction on incurring an expense. Now, you have to incur the expense. You have to incur rent, you have to incur interest, you have to incur bad debts, you have to incur depreciation. You cannot get deduction based on what? Assumption that I will incur in future. But here you are getting deduction based on assumption that you will incur expense in future. Okay. That's great, sir. That's a great benefit. Please tell me what has to be done. Is there any condition that I have to fulfill? Yes. You have to fulfill few conditions which I am stating on the board. Please listen to it carefully. Suppose this is previous year 24, 25. Pay attention please all of you. You have to fulfill few conditions. सबसे पहले, the very first thing, the amount of deduction you wish to claim, you have to deposit that amount in NABARD. Where you are supposed to deposit? In NABARD. Suppose I wish to claim 1 crore rupees as deduction. Okay, Palani? So if I wish to claim 1 crore as deduction, I have to deposit 1 crore in NABARD. National Bank for Agriculture and Rural Development. Sir, there is no NABARD in my area, sir. There is no NABARD in my area. Okay. In my nearby vicinity, there is no NABARD. Then you can also deposit in certain special account in certain banks. Okay. So there are certain other approved banks which the government has said you can open there also. Is it clear? So the first thing you have to fulfill is you have to deposit an amount. Second condition which you have to fulfill. Listen carefully. Sir, what is the second condition that I have to fulfill? Pay attention please all of you. You have to deposit the amount. If you wish to claim in the current year, then you have to deposit the amount within a time limit. Yes or no? Agreed or not? There has to be a time now by which you should deposit. Sir, what is that time limit? The time limit is within 6 months. Listen carefully on the board. Within 6 months from end of financial year. Okay? Within 6 months from end of financial year will end up where? On 30th September 2025. Okay? Or before due date of return of income. Whichever is earlier. Whichever is what? Earlier. So first condition is what? You have to deposit in NABARD. Second condition, you have to deposit within a time mentioned by the law. You have to deposit within 6 months from the end of the financial year, or if the due date is coming before that, then the due date of filing of return. Whichever is earlier. The third condition. Sir, how much amount will be allowed as deduction? If I deposit 1 crore, will I get 1 crore as deduction? No, no, no. There is a cap. There is a maximum limit. Okay. So what is the amount of deduction, sir? The amount of deduction is as follows. It is lower of two amounts. First, amount deposited. Okay. Whatever your amount you have deposited. Point number 1. Compare that with 40% of profits and gains from business and profession. 40% of your PGBP income. Okay. Now this PGBP income which you will compute, it has to be before this deduction. Obviously, it has to be before this deduction only. Okay. Your PGBP means you should compute PGBP as per the normal provisions of the income tax law. Add less, all the items, compute PGBP. Okay. But obviously before this deduction, na, because this is what we are trying to identify. Yes or no? How will I reduce this deduction at this moment? That's what I don't know only na, how much it is. That's what I am trying to find out with the help of this section. So it has to be before this deduction and before set off of what? Losses. If there is any brought forward loss, okay. If there is any what? Brought forward loss, you don't set off that as of now. Set off later. Okay, later you can set off. But while computing 40% of PGBP, don't set off. Take the profit before the set off of loss. Are you clear? Please tell me. Is it clear? Now, this is the amount of deduction that you are going to claim under the income tax law. Now, before I go ahead, I would like to say one more thing to you all and then I will come back to this discussion. Okay, I'll come back to this discussion once again. There is one thing that I would like to address to you all. Pay attention, please. Absolutely important. The SSC which we are studying over here, growing and manufacturing tea, coffee, rubber in India. These are composite business. Here there is an element of agriculture. Here there is an element of business also. Okay. So you would have learned in your CA Inter that if an SSC is compositely engaged in growing and manufacturing both, then 40% in case of growing and manufacturing tea. In case of what? Growing and manufacturing tea. 40% is business income, 60% is agriculture income. Have you learned that or not in CA Inter? Yes, even in CA final, this is very important. We have done that earlier also while discussing the definition of WDV, right? Yes or no? Similarly, if you are engaged in growing and manufacturing rubber, then 35% is business. Therefore, 35% will be subject to tax and 65% will be exempt. Are you clear? Similarly, if you are engaged in growing and manufacturing coffee, then 25% is business, 25% is taxable, 75% is exempt. And if your coffee is grown, cured, roasted, mixed with kikori, etc., there are a lot of business activity done on that. Therefore, in that case, 40% will be what? Taxable and 60% will be exempt. For coffee, there are two options. There are two possibilities. One is normal coffee, one is processed coffee. In normal coffee, only 25% is business. In processed coffee, more business activity has happened. Therefore, 40% is taxable. Is everyone clear with this? Now, you have to remember these percentages, please. Okay. Especially the T1. T1 is most important. Now, coming back to this discussion. So, sir, I will get deduction merely on deposit? Yes. Merely you deposit and you will get the deduction. Okay. So, this benefit, this deduction is for which SSC? Who are engaged in both the activities. Composite. Sir, if I am only engaged in agricultural activity, then it is not available. Sir, if I am only engaged in business activity, then also it is not available. You should be engaged in both. Now, I am putting one example in front of you all to explain you how we are going to solve a question in the examination. See on the board, please. Suppose there is an SSC who is engaged in growing plus manufacturing tea in India. Okay. Now, his PGBP income is say 5 crore rupees. Okay. Point number one. Point number two. The amount deposited by him in NABARD is say 1 crore rupees. Okay. And he has some brought forward business loss, say of 50 lakhs. Now the question is, how much is his taxable income? Okay. Now, how will we compute the income of the SSC? Listen carefully. Don't make a mistake. This is the first place where majority of the students make mistake. You don't make, please. Can you please help me? What is the first thing that I would write over here to compute my taxable income? First, I will write PGBP. How much it is? 5 crore. This PGBP has come from where? What is the activity that I am doing? Growing and manufacturing. Both I am doing. I am doing composite activity.
Yes, sir.
Yes or no? Please tell me.
Yes, sir.
Yes, sir.
So from this composite activity, I have got this what? Income. What shall I do after this? What is the next step that I should do? What shall I do after this?
Brought forward business.
Brought forward business loss comes after computation of PGBP, Palani. Why will you reduce from PGBP right now? I will take deduction na under 33AB first. Yes or no?
Yes,
Yes,
sir.
sir.
How much deduction I will get? 40% I will get.
40 is for business. 60%.
60%.
अरे यार I will say, don't say anything. Okay. 5 crore is your profit from composite activity. Okay. And first of all, you will claim this deduction na 33AB amount deposited or 40% of PGBP, whichever is lower, that will be allowed to you na first. Arey yaar, do you have a PGBP? Before loss and before deduction under this section, PGBP is available or not? And so first of all, you will claim 33AB or not? Arey, the deduction under this section will be available or not to you? Why are you learning then this section if you don't want the deduction? Arey, is the assessee engaged in growing and manufacturing tea, coffee, tea in India or not? So assessee is eligible or not for 33AB? So how much deduction is allowed under 33AB if you deposit in NABARD?
1 crore, 60% of 5 crore.
1 crore or 40% of 5 crore. How much I will get? Tell me na fast.
1 crore.
1 crore. Yes or no? Because 40% will come to 2 crore, whichever is lower is there. Now this 4 crore is by which income? Is it taxable? Is it exempt or composite income? Composite income. It's both included. Okay. Now, the next thing that I should do is bifurcate this into taxable and exempt. Okay. So how much is taxable? 40% taxable. 60% agriculture exempt. 40% taxable, 40% will come to 1.6 crore. 60% will come to 2.4 crore. Are you clear? Please tell me. And now from this portion, you are supposed to reduce this 50 lakh rupees. Why, sir? Because only taxable losses are allowed to carry forward. This loss has come from taxable source. This loss, agricultural losses are not allowed to carry forward. Because only taxable losses are allowed to carry forward, the losses has to be set off from taxable portion, not from the exempt portion. Are you able to understand? Are you able to understand or not? Please tell me. So this should be your flow of answer in the examination. Okay. Will you remember this? Now coming back to the textbook now. I will read the textbook now one by one. Few deductions, few points I am going to read from here. Section 33AB, chapter number 4. Eligibility for deduction. This section provides for deduction in the computation of taxable profits in case of an assessee carrying on business of what? Growing and manufacturing tea, coffee or rubber in India. Okay. It provides that where the assessee has before the expiry of 6 months from the end of the previous year, correct? Or before the due date of filing of return, whichever is earlier. This is the time limit you have to deposit, right? Deposit in NABARD or deposit in any other special account. Okay. Point number 1 is for NABARD. Point number 2 is for other bank account. Okay. Then below that, see on the board. The assessee shall be allowed how much deduction? Amount deposited or 40% of PGBP. PGBP has to be before 2 items. Before which 2 items? Before deduction under this section. Okay. Yes or no? And before setting off the brought forward losses. Okay. Yes or no? Now below this there are a lot of points. I'm going to discuss all of them one by one. Don't worry. Okay. There are a lot of them. This is a big section. That's the reason I told you that you take a break first and then we'll continue. Okay. Now come to page number 4.3 and get me the answer of this question, please. Tell me how much will be the taxable income of the assessee fast. So are you done? So how much is your PGBP? 200 lakhs. Okay. And how much you have contributed? 60 lakhs. So how much deduction you are going to get?
60.
60 lakhs because it is within 40%. Okay. So first you will reduce 60 lakhs from 200 lakhs, correct? After that, 140 lakhs you will segregate into 40-60, correct?
Yes, sir.
And then you will reduce the brought forward loss. Is it clear to all of you? Are Mr. Palani, is it clear or not? Shall I go ahead? Shall I go ahead? So let's go ahead with the provision now. Now the real fun begins now. Suppose this is financial year 24-25 and we have claimed this deduction of 1 crore rupees in 24-25. Okay. Now, as I've told you at the beginning of the section that the government is giving you deduction on deposit with a condition that in future you are going to withdraw that. Okay. In future you are going to withdraw that and use it for the purpose of the business. Yes. So the very idea is to give you tax benefit today to make you encouraged to do this business. And you can incur the business, you can incur the expense sorry in future years. Now listen carefully. Some extremely important and critical points are going to come one after another, around 4 to 5 points which we are going to discuss now. First, the law says that once you deposit an amount in NABARD, you have to withdraw that money only for the specified purpose. Government will specify the purpose for which it can be withdrawn. Otherwise, you cannot withdraw. I deposit 1 crore rupees in the current year and I claim deduction of 1 crore rupees in the current year. Now I cannot withdraw that money for any purpose other than certain specified purpose. Okay. Sir, what are those specified purpose? That I will let you know in a while. But in 5 circumstances, the government is allowing you to withdraw and use it for any purpose. Okay. I am again telling you. Generally, if you want to withdraw, you have to withdraw and use it for specified purpose mentioned by the government. But there are 5 circumstances in which you can withdraw like that also. Okay. There is no need to use for specified purpose. You can use it for the marriage of your child also. Okay. Shall I say? Within those 5 cases, see, listen, within those 5 cases, in 3 cases, if you withdraw, your income will, your withdrawal will not be subject to tax, it is exempt. And within those 5 cases, in 2 cases, if you withdraw, you have to pay tax. So did you understand my question? Shall I say the 5 cases in which you can freely withdraw? Out of that, shall I say the first 3 cases in which you can freely withdraw and it is exempt? In case of death of an assessee. Okay. In case of death of an assessee, withdraw the money, you can use it for any purpose, it is exempt. Second, in case of liquidation of the company, you can withdraw the money, exempt. Third, in case of partition of HUF, withdraw the money, exempt. Are you clear? Please tell me. Now, 2 cases you can withdraw, but you have to pay tax. In case of closure of business, in case of closure of business. Second, in case of dissolution of firm, in case of dissolution of firm, you can withdraw, but you have to what?
Pay tax.
Pay tax. Read note number 1, please. Is it clear, all of you? 100% remember? Now, logic is very simple here. Why dissolution and closure of business is taxable and why other 3 are exempt? If you understand the logic why other 3 are exempt, you will understand the other 2 also. Why other 3 are exempt? Will anybody die? Will anybody kill themselves to make an income exempt? Will you kill yourself? So that if you withdraw from tea, coffee, rubber account, NABARD, it should not be taxable. I will kill myself. I will do suicide. Will you do like that? Huh? Will you break your family to make your tax exempt? Tell me now, please. Will you liquidate your Tata Tea will liquidate the company to make an income exempt? They will not do such things. That's the reason it is exempt. The government knows that these are genuine cases. Okay, but the other two are possible. One can dissolve a firm and reconstitute a firm later on. It's easy to dissolve a firm. It's very difficult to liquidate a company. It's impossible to die yourself, to kill yourself. Okay. So that's the reason they have bifurcated 3 exempt, 2 taxable. Is it clear, all of you? Please tell me fast. Second point, don't read anything. Listen to me first. Acha, you have withdrawn. Not in these 5 circumstances, but normally you have withdrawn. Then what are you supposed to do? You have to use it for the purpose specified. Yes? Tell me now, please. If you withdraw normally, not in these 5 circumstances, you have to use it for the purpose specified by the government, right or not?
Sir.
So the question is, by when I should use it? Okay. Suppose if I withdrawn on 25th of December 2026, okay, 1 crore rupees I withdrawn from NABARD. Now by when I should use it? So the law says that you should use that. Point number 2. Read.
Amount withdrawn from NABARD or deposit account must be utilized for the purposes specified in the scheme in the same previous year.
So by when I should use it? In the same previous year. Means by which date? By 31st March 2027. Sir, what if I don't use by 31st of March 2027? Then what will happen? So if you withdraw the money of 1 crore rupees from the NABARD and if you don't use by 31st of March 2027, then it will be deemed income of 2027. Are you clear? Sir, how much amount will be taxable? See, again you will add to the income. Listen, very important point. 1 crore you will add to the income, and then again, because the assessee is engaged in both growing and manufacturing tea, 40% will be taxable out of 1 crore, 60% will be exempt. Are you clear? So the deemed income will also be only 40%. Only the taxable portion will be subject to tax. Are you clear? Not the entire 1 crore. Is it clear? Third case. Don't read the textbook. Third case. Suppose if I withdraw the money, okay, in 2026-27, listen carefully. I have withdrawn 1 crore. On 15th of December 2026. Okay, now listen carefully and think logically and answer me. I have withdrawn 1 crore and these are very dangerous sections. You have to be very careful about this. This was not done in CA Enter. It was not there in CA Enter. Suppose I withdrawn 1 crore on 15th December, okay, and I paid salary of financial year 26-27, okay. I paid the salary of the employee and government says that it is allowed, okay. It is specified purpose. Now think logically and tell me, I withdrawn 1 crore and I paid salary of current year 26-27. Should I get the deduction of this salary in 26-27 under PGBP? Or I should not get because I have already taken the deduction in the form of deposit earlier? Tell me please. Should I get or I should not get? I should not get. It's very logical, na? It's the same amount na you are withdrawing and depositing and using. See, this 1 crore in the year 24-25, have you claimed that 1 crore as a deduction or not? From where you are paying salary today?
Yes, sir.
You have claimed it, right?
Yes, sir.
Now you cannot withdraw that and then if you are incurring for the specified purpose, you are not doing any favor on anybody. You are fulfilling your promises. Are you clear or not? And on fulfilling of promises, you cannot ask the deduction once again. Are you clear? Please tell me.
Sir.
So this is what the next point is all about. Point number 3. Read.
Amount withdrawn from NABARD is utilized in the subsequent financial year for the specified purpose, then no deduction shall be allowed again in the year of actual expenditure as it is already allowed under section 33AB when it was deposited in NABARD.
Are you clear, all of you? Tell me fast. Yes? Very simple. It's very simple only. Learn logically, it's simple. Next, sir, I withdrawn 1 lakh crore rupees. Sir, can I buy asset out of it? Yes, you can buy assets. You are withdrawing 1 crore, correct? From NABARD. Sir, am I allowed to buy assets? Yes, you can buy all assets except certain prohibited assets. Okay. Sir, which are the prohibited assets? Read point number 4. The amount withdrawn should not be utilized for purchasing any prohibited asset like plant and machinery installed in office, not allowed. Residential accommodation, not allowed. Or office appliance, not allowed, not being computer. It means computer is allowed. So they are stopping you to use the office plant and machineries. Okay. They are stopping you to purchase residential accommodation, plant and machinery. Okay. They are stopping you to purchase office appliances. But they are not stopping you to purchase computers. Computer you can purchase. It's okay. Is it clear? Please tell me. Can I purchase land by withdrawing 1 crore rupees? Is it prohibited?
No.
So I am purchasing land. Is it allowed? It's allowed. Okay. I am not violating any provision. Say, assume I purchased the land by withdrawing 1 crore rupees from the NABARD. Now there is a lock-in in point number 5. You have to hold that land for a period of 8 years. Check. How many years? 8 years you cannot sell that land. Are you clear? Please tell me. Okay. If you sell within 8 years, then that 1 crore will be deemed income. It will be added to your income and 40% will be taxable. Are you clear? You cannot sell within 8 years. 100% clear, all of you? But there are some exceptions in which the government told you that you can sell within 8 years. 2 exceptions. First, check. If you sell to government or local authority, it is allowed. Okay. Or if it is a succession of a firm to company. What do I mean by that? If a firm is converted into a company and you are transferring the asset within 8 years, then also it is allowed. Okay. So, I will just like to ask you all the points once again. We claim deduction of 1 crore by depositing in NABARD, correct? Now, by withdrawing that amount, in 5 circumstances, I can easily withdraw. Out of that, 3 are exempt, 2 are taxable. If I withdraw and if I incur an expense for a specified purpose, will I get the deduction of the expense? The answer is no, because you have already claimed on deposit. Okay. If I withdraw and if I buy asset, is it okay? Yes, but except certain prohibited assets which are not allowed. Okay. Now, if I buy an asset, there is a lock-in of 8 years. I cannot sell the asset within 8 years. If I sell the asset within 8 years, then 1 crore will be deemed income. Am I also liable to pay capital gains on transfer of asset? I bought a land of 1 crore. I sold within 2 years. So 1 crore will be reversed, right? Along with that, capital gains will also be chargeable or not? For transfer of capital asset. Tell me now, please. I am selling that land for 2 crore rupees. Will I be liable for capital gains also or not? So if you transfer the asset within 8 years, there are 2 implications. Deemed income under PGBP and capital gains also if there is a capital gains. If there is a capital loss, then no tax. Okay. So this is what this section is all about. You can go through it once. Now pay attention here. I'll give you time. Just wait. Before that, I would like to show you the further parts of this section. Okay. And there are some doubts which I would like to raise, which you guys are not asking any doubt only for the last 2.5 hours. Okay. So at least I should raise some doubt. Okay. Now, on page number 4.1, point number 5, see on the board, all of you. Any amount standing to the credit of the assessee in the special account. How much amount is standing in the credit as per our example? 1 CR. Or deposit account cannot be withdrawn. Not possible to withdraw except for the purpose specified in the scheme. Correct? You can withdraw only for the purpose specified in the scheme. Are you clear? Or as the case may be in the deposit scheme. However, the above amount can also be withdrawn in the following circumstances. Are you clear? Out of which these three are exempt, rest of the two are taxable. Is everyone 100% clear with this? Second, where the sum standing to the credit of the assessee in the special account or deposit account, how much sum is credited? 1 crore. Is released by National Bank. National Bank is NABARD only. Okay, is released by NABARD. Why will NABARD release? Because the maturity has come. So the NABARD is releasing. Okay. Or is withdrawn by the assessee from the deposit account. So there are two possibilities you can take out the money. Either you have achieved maturity or you are withdrawing earlier. In any case, and is utilized for the purpose of, and you have utilized that money for what? For purchase of what? Any machinery or plant installed in any office premise. You are gone now. Or residential accommodation including guest house. Okay. Or any office appliance other than computer. Computer is okay. Okay. Or next point similar to what we have done in what? Additional depreciation also. Any machinery on which you have already claimed 100% deduction. Remember or not? Right? Or any machinery which is mentioned in the 11th schedule of the Income Tax Act. What is 11th schedule, sir? Now all these things I don't discuss while discussing the main provision. Okay. I discuss this while getting into the detailing of the section. While discussing the main provision, I will tell you what all things are very important academically for you. Now we do detailing after that. What is 11th schedule? 11th schedule is a schedule which is attached after the Income Tax Act. In Income Tax Act, as I have told you earlier, there are 298 sections. After 298 sections, there are 14 schedules attached under the income tax law. All of them talk about certain aspects. Out of that, 11th schedule talks about certain assets, certain plant and machineries, which the government does not want you to buy over here. So why this schedule is made? Because the government has put a list of plant and machineries over there, and those lists are applicable in multiple sections. So the government thought that rather than putting that list again and again in different sections, why not put a schedule behind and put a reference of that schedule once and for all? Are you able to understand or not?
Sure.
So you will find 11 schedule references at multiple places. So rather than giving that entire list of 11 schedule items again and again in different sections, we are putting in that in the form of an annexure. Are you able to understand? And we are giving reference of that annexure again and again. So what shall I do, sir? I should not buy these assets. What will happen if you buy these assets? If you withdraw the money from NABARD and buy this asset, the whole of the such amounts or utilized will be taxable. Check. It will be added to your income. Is it clear? Next point. Next point is what we have done earlier. Okay. In case of closure of business and in case of dissolution of firm, it will be taxable. Yes? Tell me now, please.
Yes, sir.
Next. Now this one I want you all to read very carefully. We have done just now, but still I want you all to read once again. Where any amount standing to the credit of the assessee in the special account or in the deposit account is utilized by the assessee for any expenditure in connection with such business in accordance with the scheme or deposit scheme, such expenditure shall not be allowed in computing the business income. Agreed or not? I am talking about what? I have withdrawn 1 crore rupees and I have paid what?
The expenditure.
In my example, what I have paid?
Salary.
Salary. Will I get the deduction of that salary?
No.
No. So now I have a question to all of you, which generally a student ask me. Now you guys are not asking me, so I will ask you. So there are only two ways possible. Either you ask me or I will ask you. Okay. Suppose I withdraw 1 crore rupees. Okay. And suppose if I withdraw 1 crore rupees and if I buy a furniture, for example, or if I buy a new plant and machinery to be used in factory, to be used where? In factory. because I am growing and manufacturing tea. So for manufacturing, I require plant and machinery, correct or not? So I withdrawn 1 crore rupees and I bought a new plant and machinery, and which is installed and put to use. My question to all of you, I withdrawn that 1 crore rupees, bought a new plant and machinery. Will I get the deduction of additional depreciation? Sorry, will I get the deduction of normal depreciation? Under section 32, subsection 1, clause 2. Will I get the deduction of normal depreciation under section 32, subsection 1, clause 2? This is the question which a general student asks me, but you are not asking, so I am asking. Tell me please. Give your answer. Vishnu Priya. Nivedha.
Allow that as total deductions before itself. Again, how we can claim it?
No. That's what I am asking you. It is not allowed so far. Assume that it is not allowed so far. Will it be allowed or to you or not in future? Okay. I am a tea, coffee, rubber assessee. I am buying an asset. In future, I am doing this. I am not buying plant and machinery today. I am buying plant and machinery in 2-3 years after I have deposited in NABARD. I have withdrawn that money. Now I am buying a machinery. On that machinery, will I get depreciation or not? That's what I am asking. In current year, I am not asking. Tell me fast. Don't waste time. Fast. Yes or no, at least say. Why no? Niveda? Louder. I am not able to listen. So what? So what?
There are two benefits, right?
Two benefits will be there. So who are you and me to stop two benefits? The law will stop two benefits. Point number 8. What is mentioned in point number 8? Listen carefully. I am highlighting a very important word over here. Okay. Then you read it if you want. If you withdraw money and if you use it for any expenditure, okay, then that expenditure is not allowed as a deduction. That's what it is written, right? Is depreciation an expenditure? Is depreciation an expense? I am asking you, is depreciation an expense? It's an accounting question. And the answer is no. It's not an expense, it's an allowance. Okay. And therefore, the government has stopped here for incurring an expense, not for an allowance. It's not an expense. It's an allowance. And by that logic, you can claim normal depreciation on that asset. Because the government has not stopped you to claim. See, wherever the government wants to stop you now, listen, see my words. In future, you will see. In many sections later on, you will see no deduction is allowed under any provision under this law for any expense, for any allowance. They will use such words. But here they are not using such words. They are using the words any expenditure. Are you clear? Therefore, such deduction will be what? Allowed. Now, the same question I would like to extend. See here. Will I bought a new plant and machinery. I will get normal depreciation. Okay? Agreed? Now the question, will I get additional depreciation on that plant and machinery? Now the answer is no. Let me tell you why. Because if you remember, a week back we have done, in additional depreciation it is written that if you have claimed the entire cost of the asset by way of depreciation or otherwise, then you cannot claim the additional depreciation. Do you remember that or not? Please tell me. Have we already claimed 100% of the asset already in the form of NABARD deposit? Tell me now.
Yes, sir.
So additional depreciation won't be allowed to you. Are you clear? Please tell me. So this is what this great paragraph is all about. Next. Point number 10. See here, listen. Suppose you bought a land. Now there is a lock-in period in the land. Okay. How much is the lock-in period? 8 years. I very simply said 8 years you cannot sell. Very simply. You also didn't ask me any question. Sir, what question we will ask in every sentence, sir? You will only shout us. The question which I expect from you regarding this is, if I say the lock-in is 8 years, then the question is from where the lock-in will start. I am purchasing the land today. So from today will 8 years start? Okay? No. Read. Point number 10. From where the 8 years start as per the law? Is it clear? From where it is starting? 8 years from the end of the previous year it will start. If I buy today, it will start from 1st of April 2025. Are you clear or not? Are you clear?
Yes, sir.
So the point I'm trying to say is color book is very important. On the day of examination, you are going to study from there only. During the study leave also, you are going to study from there only. But if you want to actually learn the law and understand the subject in a better manner, then only color book is not sufficient to understand the subject. Yes, to pass the subject that might be sufficient. But to understand the subject in true spirit and to be ready for the difficult of the difficult papers, it is absolutely important to do analysis of the section in detail. Are you able to understand or not? This book, this book, that is the detailed book, will not only do detailing of the subject, but will also make you comfortable with the language of the law, that how the law is written. Because ultimately in the examination you have to frame sentences, na? Yes or no? So to frame the sentences, you should have learned something in legal terms. Otherwise, you will frame your sentence in a local English. Yes or no? No, if, no, but, this, that, or is active voice, passive voice. Then you don't expect marks in examination. Okay. Your answer has to be reasonably as per the law. If not very technical, at least has to be having some sense in your sentences. That will only come if you read the sentences again and again from your textbook. Color book is very important. I do not deny this fact, because that is very practical book. A day before exam, only that book is possible to revise, not this book. But at least in the class or at least in the study leave, you can go through this once. Okay. So now there is one illustration which I will put in front of you all. It's a continuation of this illustration. Okay. In this illustration, you have deposited how much? 60 lakhs. So in the next illustration, you are withdrawing 20 lakhs out of it and you are using for 3 purpose. Okay. So ekdam aram se take your time and tell me what will happen now in future. Okay. Done? Done. So you are withdrawing 20 lakh rupees from NABARD. What will happen for the 5 lakh rupees which you are withdrawing from NABARD and incurring an expense as per the T board on 31st December? What will happen to this? Is it allowed? Arey, answer something, yaar. I am asking you all.
Allowed, sir.
You are incurring 5 lakh rupees as per the scheme. So will any deemed income be charged to you?
No deemed.
No deemed income. Okay. But rupees 5 lakh will not be allowed as a deduction. Correct?
Correct.
Yes or no? You are not doing any favor on anybody, na?
But,
By claiming 5 lakh as deduction. Are you clear or not?
yes, sir.
Rupees 6 lakhs for meeting an expense as per the T board on 4th of April 2026. What will happen? What will happen? Deemed income. Correct? Why deemed income? Because you are incurring in the next year. Are you clear? You have to incur by 31st of March. That is the time limit mentioned by the law. Are you clear or not? And last but not least, 9 lakh is incurred as an expenditure not specified by the T board. So this will be subject to deemed income. Are you clear? Are you clear? So this is what this section is all about. Okay. Now after section 33AB, there is a similar section, almost copy paste, section 33ABA. Exactly similar to 33AB with just two minor changes. Just two minor changes. Not very important for exam also this one. Okay. 33AB is very important. ABA is not that important. So what is section 33ABA then? It is a section which is termed as site restoration fund. So what kind of site restoration fund? So if you are engaged in prospecting, extraction or production of petrol or natural gas in India, then this deduction is available for you. Okay. So you are into the business of natural gas or petrol in India. Either you are exploring petrol or you are producing petrol, okay, or natural gas in India, like Reliance Industry, ONGC, etc. Okay. So you are eligible for this deduction. Now the question is, everything is similar to previous section with some changes. First, in the previous section, we used to deposit in NABARD. Here we are going to deposit in SBI. Is it clear? Minor changes are there. Because petrol and natural gas has nothing to do with agricultural bank. Yes or no? What relation petrol has with NABARD? Nothing.
Clear, clear.
So in case of this, you have to deposit in NABARD, in SBI. Secondly, here the time limit to deposit is slightly stricter. There we used to deposit before 6 months from the end of the financial year. Okay. Here we have to deposit before the end of the financial year. Okay. That is before 31st March 25, sorry. So if you want to claim deduction in 2024-25, you have to deposit by 31st March 2025. Is it clear to all of you? Please tell me.
Sir.
And the third one is, there it was 40%, here it is 20%. Okay. 20% of PGBP before this deduction and before losses. Okay. So these are the few points which are differences. Minor differences, not great. Now let's talk about complete similarity. Rest all provision, as you can see over here, are absolutely similar to 33AB. All. Whatever points were mentioned there, all of them are applicable here. Once you deposit the money in SBI, you cannot withdraw. In 5 cases, you can withdraw, out of which 3 are exempt, 2 are taxable. If you withdraw, then you have to use in the same financial year. If you withdraw and if you incur an expense, then expense is not allowed as a deduction. If you withdraw, you have to purchase only specified asset, not prohibited assets. If you withdraw and purchase an asset, you have to lock in for 8 years. For lock-in, there are 2 exceptions. Here also those 2 exceptions will continue. So when I say rest, all provisions are same, it is absolutely same. There is no difference. Okay. Now this section is not very important for exam. ICI has not been asking this section. Never ever asked they have. Why they have not asked? Because there is nothing great to ask in this. The real challenge starts when there is a 40-60 agriculture and business income. There the real challenge starts. There the student can get confused. So the ICI is testing 33 AB all the time, not 33 ABA. Are in 33 ABA, if I tell you compute the PGBP income, it's very simple, na? PGBP minus deduction minus loss, that's it. Are yes or no? In this section, you have to directly compute, na? There is no bifurcation of taxable income and exempt income, something like this over here. Are you clear? Therefore, this is very simple section. Okay. Never ever asked in the examination also. So I don't think so. You should focus much on this. But anyways, you don't have to put any extra effort for this section. It's similar to the previous one. Okay. You just have to see the differences between the two. So now we are moving towards our second important sector for the day. So let's move on to the second very important sector for the day, and that is scientific research sector. Which sector? Scientific research. Okay. So if you are engaged in scientific research, the government is going to give you great benefits under the income tax law. Scientific research is very, very, very important for the economy. No country in today's time can say that we are developed without appropriate scientific research. A sign of a developed country is that you should be scientifically advanced. Agreed or not? Please tell me. In today's time. Today's time is of science and technology. Okay. Today's era is of what? Science and technology. Once upon a time, around 500 years back, it was a time of literature. People used to write good things. These days, nobody write anything. Everybody wants to invent. Okay. So today's generation is of science and invention. And in this generation, if you want to stand, if you want to compete with other countries, you have to be scientifically advanced. And to promote that, the government has made lot of income tax benefits. Okay. Lot of income tax benefits are given by the Indian government. So today we are going to learn all the benefits over here one by one. Listen carefully on the board, please, all of you. All the scientific research deductions are divided into 7 sections. How many sections are there for scientific research? 7. First section is 35 subsection 1 clause 1. Second section is section 35 subsection 1 clause 4. Third section is section 35 2AB. Okay. Fourth section is 35 subsection 1 clause 2. Fifth section is 35 subsection 1 clause 3. Sixth section is 35 2AA. And seventh section is 35 subsection 1 clause 2A. So these are the 7 sections which are there under scientific research. Take a screenshot of this in your mind. Okay, not in your laptop or mobile. In your mind, you take a screenshot. Okay. So how I have arranged the section, just try to keep it in your mind. Sir has written first 2 sections, then 1 section in the right hand side, and then 4 sections below. Okay. There is some reason to separate them. I could have written all of them one by one, one below another. Yes or no? There is some reason to segregate all of them separately. First of all, why I have drawn a line and I have written few sections above and few sections below. Okay. The reason is the sections which are there above the line. The sections which are there above the line. Those sections are relevant to those people who are indulged in scientific research in their business. Who do scientific research in their business. It is applicable for those people, these sections. All the above 3 sections. If you are engaged in scientific research, those 3 sections would be relevant for you. Like, for example, suppose if I am Infosys, I am engaged in scientific research, so it is applicable for me. Suppose if I am Tata Motors, I am doing scientific research. Suppose if I am Cipla, I am making medicine, so I am doing scientific research to develop a drug. So I am doing scientific research in my business. So these 3 sections are relevant for me, the above one. What about the below 4? Below 4 sections? Here, you have to help others to do scientific research. How will you help others to do scientific research? By donating, by contributing. So if you are giving donation to any other scientific research associations, colleges, university, companies, all those who are indulged in scientific research, and you are financially helping them. Okay. So we will give you a deduction of donation. Are you clear? Please tell me. We will give you what? The deduction of the donation. Is it clear? So now we are going to talk about these two sections first of all. Okay. Then after we are done with these two, then we'll talk about this. And then after we are done with that also, then we will talk about these four. Okay. So this is how our order of discussion will go ahead. So I'm starting with the first two sections, please. I'm making one small story for all of you so that you understand in a better manner. Okay. Suppose this is previous year 21-22, or rather I will write financial year 21-22. Okay. You are Mr. A. You are a medical doctor. Okay. Now you have just become a doctor and your parents are asking you, your friends are asking you, your relatives are asking you, what is your plan in life? Are you going to do a job? Are you going to do joint any hospital? Are you going to start with your own clinic? Are you going to further study? What are you going to do? So he is saying that, no, I'm not going to do all these things. Then what are you going to do? He said that I have one thing in my mind that I want to develop a drug. I want to develop a medicine which will help a lot of people. Okay. So I want to make new medicines. Okay. I want to make my own pharma company in future. Okay. This is his vision. So now for this purpose, he has to do research and development. He has to develop the drug, right? He has to get the approval, all this process he has to do before he starts the business. So he started doing all these things. Suppose for that purpose, he purchased a land of 10 lakh rupees. What he purchased? Land. Okay. Then he purchased some plant and machinery of 5 lakh rupees. Then he also made a building on the land of 10 lakh rupees. He also purchased some furniture of 4 lakh rupees. Then he has purchased some raw material of 5 lakh rupees. He has paid some salary to some employees of 5 lakh rupees. Okay. So to start research, at least these minimum things would be required. He would require a place. He would require a place to sit. He would require some furniture. He would require some machineries to do research. He would require some people and he would require some raw material. Yes or no? At least these basic things are required to start the business. Are you clear? Please tell me. Now, 1 year has gone. 1 year gone. Is the research done, sir? Research not done. Research is going on. It will take some time to complete the research. Next year started, financial year 22-23. Say he purchased another plant and machinery of 10 lakh rupees. Pay attention, please. He paid salary of 6 lakh rupees. He purchased raw material of 5 lakh rupees. In the second year, sir, is the research done? Research is still not done. It is still going on. It will take some time for it to complete. Third year, financial year 23-24. Okay. I paid some salary of 8 lakh rupees. I purchased some raw material of 8 lakh rupees. Sir, is the research done, sir? Yes, finally the research is done now. The product is ready. Research is done, product is ready. Pay attention, please, all of you. Now, the medicine is ready. According to me, the medicine is ready. But according to me, doesn't matter. You have to send the medicine to the Drug Controller of India for what? For certification, whether it is certified or not. The Drug Controller of India will certify the medicine and after that it will become a valid medicine. Are you able to understand or not? Please tell me. Yes or no?
Sir.
So the Drug Controller of India gave me the medicine and they said that yes, it is approved. Now you can start your business. Okay. So from 1st April, 2024, I
started my business.
Commenced the business. Okay. Is it clear? Did everybody understand my story? Please. So I don't want to directly say the provision. I would like to create this story so that you would relate it and you understand in a better manner. So what will happen, sir? My business has started. Now will I start to generate revenue? Please tell me. So far, was I generating any revenue? The answer is no. I was only doing expenditures. I was not generating any revenue in pre-commencement period. So now I can generate revenue, and if I'm generating revenue, I will ask for deductions, yes or no? So will I get deduction or not? Yes, you will get. Under which section, sir? So government has created two sections. See on the board, 35 subsection 1 clause 1. This is deduction for revenue expenditure. Which expenditure? Revenue.
Expenditure.
And then second section is 35 subsection 1 clause 4. This is capital expenditure. Capital expenditure. Is it clear to all of you? So first of all, we will segregate all the expenditure into two categories, capital and revenue. First of all, I am highlighting all the capital expenditure in yellow color. This is capital, this is capital, this is capital, this is capital, this is capital. Is it clear? And I am highlighting all the green color with, for what? For my revenue expense. This is my revenue, 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 this is my revenue. Is everyone clear with this? Please tell me. Okay. Now let's talk about the revenue expense first, and then we'll talk about the capital expenditure. So the government says that whatever revenue expense you have incurred in the pre-commencement period, for last 3 years, for last 3 years only, not before that. If you have incurred before 3 years, then it will not be allowed. Okay. Suppose you have taken 5 years to complete your research. How many years you have taken to complete the research? 5. Then you will not get the deduction for the first 2 years. Are you clear? You will get deduction only of the last 3 years. Is it clear to all of you? Please tell me. So for last 3 years, you will get the deduction. Deduction of what, sir? You will get the deduction of raw material. You will get the deduction of salary, excluding perquisites. Perquisites we will not give you. Okay. So raw material you will get, salary you will get, all of them you will get 100%. 100% you can claim of this, 100% this, 100% this in one single year. Entire amount in one single year, 100%. Is it clear? Are you clear?
Clear.
So pre-commencement deduction do you get? Yes. For how many years? 3 years. Which all expenses? Raw material, salary, etc. For 3 years. 100% in first year you will get. Okay. Acha. Do these companies only do research in pre-commencement? They don't do research in post-commencement or what? Tell me. Their research is continuous, na? It's going on.
Yes, sir.
Every day. So even in post-commencement, post-commencement, if you do any revenue expense, you will get it. Okay? 100%. Is it clear?
Clear.
Now, let's talk about capital expenditure. Okay, in capital expenditure, you will get all capital expenditure deduction except land. So I'm striking off land. Okay. So in capital expenditure also we will get pre-commencement deduction. Yes, pre-commencement deduction for last how many years? 3 years. Sir, how much deduction we will get for capital expenditure? You will get plant and machinery deduction, building deduction, furniture deduction. Sir, how much? In 21-22, I have incurred 5 lakhs, 10 lakh, 4 lakh. Yes. In 22-23, I have incurred 10 lakh capital expenditure. How much I will get? Everything you can claim 100% in first year. Go. 100% capital expenditure in the first year, sir? Yes. Except land, everything will be allowed to you 100% in the first year itself. Don't worry about it. Okay. Are you clear? Please tell me.
Clear, sir.
Sir, this is great benefit, sir. Sir, in post also I will get 100. Post also 100%. Don't worry, except land. Don't ask for land, except land. All other expenses 100% you can claim. 100%. And if you are claiming so much expenses, especially capital expenses, so much you are claiming, capital expense, building plant, machinery, fixed assets, big expenses these are. If you are claiming so many capital expenses, revenue expenses for the time being, we can say that it's a small amount. Okay. But capital expenditure, plant, machinery, furniture, building, it can be huge. So the question is, will I have sufficient profit in the first year to wipe off such big expenses? Tell me now.
No, sir.
So there will be loss now in the first year. Tell me now, please.
Yes, sir.
So if a loss is coming because of capital expenditure, because of not revenue, capital, then it will be treated same as UAD. It will be treated like what? Just like UAD. Are you able to understand or not? Just like family planning expense. Are you clear? Family planning capital expenditure, unabsorbed capital expenditure of family planning was also treated like UAD only, na? So now I am putting a full stop on this concept. This concept will never ever come till the last lecture now. Only 3 items are treated like UAD. One is UAD itself. Okay. Second,
Planning.
family planning, which expenditure?
Capital expenditure.
Capital. And scientific research, which expenditure?
Capital expenditure.
Capital expenditure. Are you clear? Revenue expenditure, you are incurring losses because of the revenue expense. That can be treated like a normal business loss. Are you clear? Now, one last thing I would like to say over here before I move on to the third section. For God's sake, I am folding hands in front of the SSE. I am income tax department. And I am folding hands in front of the SSE and saying that I am requesting, please don't ask depreciation on these assets, please. Okay. Fair enough. Or you want depreciation also after claiming 100%. Tell me, Vishnu Priya, why are you showing only this much of your face? This much. After some time, I'll be only able to see your hair, nothing else. Okay. Slowly and gradually, you are going down. So, what I was saying?
It comes at 3 places.
That I completed. UAD come at 3 places. That I completed. I was saying depreciation, don't ask. Okay. Normal depreciation also not allowed. Additional depreciation also. Please tell me. Not allowed that under the income tax law. Okay. So let's talk about the first two sections. First of all, over here in your book, page number 1.16. See on the board, please, all of you. 3511 revenue, 3514 capital. Okay. Both are 100%. Okay. In pre-commencement, only last 3 years. Okay. Salary excluding perquisite, purchase of material 100%. Post-commencement, any revenue expense 100%. Okay. Capital also pre-commencement, any asset except land last 3 years 100%. Okay. Post-commencement also asset, any asset except land 100%. Is it clear? Are you clear? Next, no deduction of depreciation and unabsorbed capital expenditure will be treated like what? Please tell me. Will be treated like UAD. Okay. Now, I would like to ask you one question. Very simple question. Tell me very fast. Don't waste time. These two deductions which I have explained you just now, is it applicable to every SSC who are engaged in scientific research? When I say every SSC, every kind of person, individual, HUF, firm, AOP, BY, company, LLP, please tell me.
Yes, sir.
Is it applicable to everyone or not? If nothing is mentioned.
Yes, sir.
Yes, the SSC should be engaged in scientific research. Yes. But that SSC can be any kind of person. Individual, HUF, firm, AOP, BY, company, LLP, anything. Yes or no?
Sir.
Now I am moving ahead towards the third section, which was there over here. Which was there over here. Check, check, check. 35 2AB. Can you see this? Now what is this third section? In third section, there are a lot of conditions, which you can see in this box one by one. Shall I say? Shall I say?
Sir.
35 2AB. First of all, in this third section, you should be a company SSC. Only to company this is allowed, not to everybody. Okay. Can you please tell me, before this, which was the section in which only company was there?
Planning.
Family planning. Okay. You may forget this. Okay. Because if a multiple condition, if a same condition is coming at multiple places, yes, then you will have start thinking, yeah, it has come earlier also. Where it has come, yeah? Now, how will you search that? So for that purpose, I have done one thing for you all. Don't worry in life. If you come to the last page of the PGPP chapter, I have done interlinking of the entire chapter over here. Like, in which all section manufacturing or production is mentioned under the entire chapter. Okay. In which all section company word is mentioned in the entire chapter. In which all section Indian company is mentioned in the entire chapter. In which all section the expenditure is amortized over the years. In which all section the deduction is based on some percentage like 33AB, 40% of PGBP, 33ABA, 20% of PGBP. Yes or no? We have done it today. In which all section there is a lock-in mentioned like in 33AB, ABA, 8 years lock-in is there or not? Tell me please. And in which all section new plant and machinery is there like in 3212A, that is additional depreciation, new plant and machinery is there. Yes. So this is the interlinking of the entire chapter in one page. Okay. So that you should not get confused regarding how many times this condition is repeating in the law. Don't worry. Go to the last page, you will come to know. Okay. So you don't have to put an extra effort of thinking and rethinking and going back in pages and then searching it. Don't do all those things. All those things I have done already. You have to study. That's it. So this is the section. Second time it is coming after family planning where it is allowed only to company. Okay. What should the company do, sir? The company should be engaged in manufacturing of any article or thing other than 11 schedule items. Sir, what is 11 schedule? In 11 schedule, there are 29 items mentioned by the government. How many? 29. Like alcohol, tobacco, cinematographic camera, like cosmetic products. So there are some negative items which are not very, very important for day-to-day life. So the government is saying make manufacture any article or thing except 11 schedule item. Are you clear? Or you should be engaged in the business of biotechnology. Okay. So if you are engaged in biotechnology or manufacture of any article or thing except 11 schedule item. So there are a lot of conditions as I have told you earlier only in this section. First, you should be company. Second, you should be manufacturer or biotechnology. Third, you should do in-house research. In-house research means you cannot outsource the research to anybody. Are you clear? You should do research yourself. You cannot give that research to somebody else to do. In-house it has to be. It should be approved by a prescribed authority and there has to be an agreement with the central government. Okay. So you should do yourself research. There has to be, your research should be approved by the government. You should yourself do the research and the government should sign an agreement that yes, your research is approved. Okay. Next, this deduction is not for building and land. For land and building, you will not get this section 35(2)(ab). Okay. But am I doing scientific research? Please tell me. Am I doing scientific research or not in this section? So for building, I can go to the above section and claim 35(1)(4). Okay. Because the previous two sections are for everybody, na? This is company specific. Previous two is for everybody, right? Are you clear?
Yes, sir.
Sir, what's the point of fulfilling these conditions when everybody can classified over there? Yes or no? A question will come, if everybody can classify over there without fulfilling all these conditions, why the hell I will come over here? See, this section does not have any relevance today. I am telling you why. Because this section gives you how much deduction? 100%. Previous section also give you 100%. In fact, in this section, there are a lot of restrictions. In previous section, there is no restriction. Are you clear or not? Tell me, please.
Clear.
Then why a person will come here? Today, nobody will come. But 2-3 years back, this section was very, 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 very important. Today, it has become slightly redundant. The reason is 2-3 years back, people used to get over here 150% deduction. How much? For every 100 rupees incurred, you will get 150 as a deduction. And 5 years back, how many years back? People used to get 200% deduction under this section. How much? 200%. The current government has reduced the percentage to 100. So at that time, this was a very lucrative section. We used to love this section. Companies like Tata Motors, companies like Ashok Leyland, they have taken 200% deduction under this section for R&D in their business, for R&D in their car manufacturing and in their goods carriage manufacturing business. So today it looks redundant. Yes, because anyways this and previous one is same only. Further, there are conditions. This section is only for post commencement. Sir, what about pre-commencement? So for pre-commencement, go above and claim over there. Yes? Or in the previous two sections, pre-commencement deductions are there or not for you?
Sir.
So you can claim over there and then come over here for the post-commencement deduction. Okay. If you fulfill all these conditions, you will get 100% of all the revenue and capital expenditure as deduction. 100%. Except land and building. For building, you can go to previous section. So plant, machinery, furniture, you will get 100% and rest all the revenue expense you can claim over here 100%. Okay. But given a choice, if I choose this or if I choose the previous one, it doesn't make much difference. In both the cases, the quantum of deduction is going to be same in today's time. So if the quantum would have been different, I would have chosen between the two. Okay. Now it is same only. In fact, the previous two are much better because they are less condition to fulfill. This one has more condition to fulfill. Is everyone clear with this? Please tell me. So this is your third section. So how, sir, which section we should write in the exam, sir? See, if in the exam it is written that company, what? Company, manufacturer, biotechnology, okay? In-house research. If these words are there in the question now, then you should write this section only, okay?
Yes, sir.
And if it is not written, that company word is not written, in-house research is not written, manufacturing word is not written, then you can say we are claiming in the above two sections, okay? Even though your answer will come to same only, in both the cases you are going to get 100% only. Are you clear?
Yes, sir.
Now let's go to the below the line section. I have made one line, right? And below the line I have written 4 sections. What I have told you regarding those 4 sections, what is the relevance of those 4 sections? Please tell me.
To people who are doing scientific.
It is applicable if you give for what? If you give donation for scientific purpose. Okay, now there are 4 sections over here. First, listen carefully. You are giving contribution, section 35, 1, 2. Remember in your mind, please, 1, 2, 1, 3, 2 AA and 1, 2A. First of all, remember the section number in your mind if possible. If you are not able to remember, then write section 35. That's it. Okay. What you can write if you don't remember? Just write section 35. That's it. Okay. Are you clear? Now listen carefully. The first one. If you are contributing to research association, okay, or some college, university, etc. What are they doing? What are they doing? If they are doing what? Scientific research, you will get 100% deduction. Okay. So in exam, it will be very clearly written, the SSC has given a donation of 10 lakh rupees to a research association engaged in scientific research. Okay. So you should write that 100% deduction is allowed. Okay.
Yes, sir.
Now, if you give donation to, again, college, university, etc., now they are engaged in statistical or social science research. Which research?
Social science research.
Statistical research, social science research. They are researching on history. They are researching on, say, statistical research will include, they are researching on, say, for example, weather they are researching. They are trying to find out the statistics. So if you are engaged in even statistical research or social science, that is also scientific research in the eyes of the law, you will get 100% deduction. Third, if you are giving donation to National Laboratory or IIT, to whom you are giving donation, National Laboratory, IIT, 100% deduction. Are you clear? Please tell me. If you are giving donation to whom?
Laboratory or IIT.
National Laboratory or IIT, 100% deduction will be given to you. Are you clear? Indian Institute of Technology, 100% deduction. And the fourth one, if you give donation to Indian company engaged in scientific research, the first 3 are not companies, the first 3 are universities, okay, colleges. The first 3 are institutions. The fourth one is Indian company, like Cipla, if you are giving donation to Cipla, okay. If you are giving donation to Infosys, if you are giving donation to Tata Motors, these are Indian companies. Are you clear? So you will get deduction under PGBP. How much? 100%. Earlier, this was also different. Some was 175%, some of them were 150%, some of them were 125%. But now everything is 100%. Academically, it's easy for us. Okay. We don't have to remember different percentages. Are you clear? Now,
there is no specific scientific research or social research. We can just leave, sir.
yes. Okay. So now all the people, all the institution, colleges, universities to whom you are giving donation now, they must be approved. They must be approved institution. The government will give them an approval certificate. Okay. They have to get themselves registered under the government laws. That yes, we are eligible for what? Please tell me. We are eligible for scientific research. We are eligible for what? Statistical social science. Are you clear? So if you want deduction, then you should give it to the approved institution. Now there is a problem which is created here. Listen carefully. Suppose I am a company and I gave a donation to an institution engaged in scientific research, okay, of 10 lakh rupees. I claim the deduction. Now what happened after a few months is, after a few months or after a few years, the government withdrawn the approval of the company, of the Scientific Research Association, okay. So I gave the donation, I claim the deduction. After that, the government withdrawn the approval, okay. So what do you feel? Will my deduction be denied or it will be allowed to me? What do you feel? Should the government deny my deduction or should the government allow me the deduction? It is what? It is not assessee's mistake. Yes, absolutely correct, Vishnu Priya. Very nice. So if it is not assessee's mistake, should assessee continue to get the deduction of that amount? Tell me now on this fast. Yes, it is not assessee's mistake, na? Assessee's duty is to give donation to approved institution. Approved institution has shown me the certificate. I have given the donation. Okay. And now if they are doing some mischief or some wrong activity, it is not my mistake. So the government says, point number 1, read. Your deduction will not be denied, don't worry. Okay. Are you clear? Are you clear? Okay. Now, out of these 4 people, just ignore this. Okay. And we will talk about rest of 3. Okay. Who are rest of 3? Section number? Section number 35, 1, 1, 2. Then 1, 3 is for whom? Statistical and social science. And the third one is?
2A.
2A is for whom? Indian company. If you are giving donation to Indian company engaged in scientific research, correct? So first one is for scientific research, second is for social and statistical research, third is for Indian company engaged in scientific research. Okay. Now there are a lot of amendments made by the government of India in the last 2 years for these 3 people. Okay. Suppose you are a donor over here. Okay. And here it is donee. Who is donee? Donee are these institutions, correct? Who are receiving the money, correct or not? So the government said that if the donee, listen carefully, if the donee is registered under these sections, okay, or even if the donee is registered under 80G, 80G also people receive donation, yes? Are in 80G now we give donation to certain institutions. Are yes or no? Prime Minister fund, this fund, that fund, this fund, that fund. We will see later on. So this discussion which I am doing is also applicable for 80G. So I am saying that also today itself. Okay. So suppose if I have given a donation of 10 lakh rupees. Okay. I am Mr. A. I have given a donation of how much? 10 lakhs. Is it clear, beta? Now the government has put donee under 2 work. Donee has to do 2 things. Okay. If the donee does not do 2 things, the donee will be penalized. Donee will be penalized. Sir, what are the 2 things that donee has to do? First, the donee has to give a statement to the government. What? To the Principal Director General of Income Tax. Okay. A donee has to give a statement to the Principal Director General of Income Tax. What will be there in the statement, sir? That who all have given me the donation. Okay. So if I am a donee, I have to give a statement to the government that Mr. Palani has given me donation, Miss Vishnu Priya has given me, Miss Niveda has given me the donation, and I have to give the PAN number of all of them to the government of India. Okay. Are you clear? The second work that I have to do, shall I say? I have to give a certificate to whom? To the donor. Okay. That this is the valid certificate so that you can claim deduction under what? 3512, 3513, 3512A or ATG. Okay. So if the donee does not do these two things, then what are the consequences? Okay. Shall I say? If the donee does not do these two things, then the consequences are as follows. First, a donee will be liable for a fee. What? Fee of 2000 rupees per day. How much fee?
1,000 rupees per day.
And also a penalty. Also a, which will be imposed by the assessing officer. Okay. Of 10,000 rupees to 1 lakh rupees, whatever he feels. Okay. That's the range. So the donee has to bear these two costs. Come here. Let's read. Where the assessee referred in 3512, okay, 13, okay, 12A, okay, fails to deliver a statement within the time prescribed, okay, you are failing to deliver a statement, or fails to furnish a certificate prescribed, okay, or institution fails to deliver a statement or certificate prescribed under ATG. ATG people are also covered here, okay. Then it shall be liable to pay by way of a fee 2,000 rupees for every day during which the failure continues. Are you clear? And further, as per section 271K, AO will impose a penalty from 10,000 to 1 lakh rupees. Is everyone clear with this? Please tell me. 100% clear?
100% clear, sir.
Now, these are the two work, additional formality, additional compliances that donee has to do. Okay. If donee doesn't do, then donee has to bear that cost of fee and penalty. And one more thing, if donee does not do these two things, okay, donee does not do these two things, then even donor will be not allowed the deduction. Okay. So, donee's wrongdoing is affecting even the donor. The donor will also be what? Denied the deduction under PGBP of this particular donation. Check this point number 2 over here. Read. Are you clear? Tell me. Is it clear? So the donor will not be allowed the deduction. So how the donor will be penalized? Donor will be penalized by disallowing the deduction, and the donee will be penalized by imposing the penalty and fee. Are you clear? Now, one last thing is there in this section that I will address to you all. Shall I? We have done with the 7th section. Remember the first two section? Which were the first two section? 35? 1 is for? Hey, how your memory strength can be so weak in life? Huh? 1 is for? Revenue expense. And 1 is for? Capital expense. Excellent. Okay. In both the section you get pre-commencement deduction also? Yes, up to 3 years. And in post-commencement, no issue. Okay. Now, one last thing that I would like to address you all. Pay attention, please. Suppose in every company which is engaged in scientific research, there are two departments. Suppose this is Cipla, a pharma company. There are two departments in the Cipla. One is called as research department. Okay. One is what? Research division, and second is called as business division. Okay. Now, don't be under a wrong impression that whatever Cipla will do, they will get 100%. It's not like that. Don't be under a wrong impression that whatever Cipla will purchase, plant, machinery, furniture, building, they will get 100% deduction under 3514. It's not like that. Please don't be mistaken. The thing is, if Cipla is purchasing any asset or if Cipla is incurring any revenue expense for research and development, then that is eligible for deduction under this section. Suppose if Cipla is buying a air condition for finance department, then that is not eligible for 100% deduction. Are you able to understand or not? And that is eligible for depreciation, the way everybody takes. Yes, if Cipla is buying some air condition for laboratory for research and development, yes, that is eligible for 100% deduction. So this deduction, listen carefully, my sentence, if you understand this sentence, this deduction is not to an assessee, it is to an activity of the assessee. Assessee cannot say that I am Cipla, I am an assessee, I will get all deduction 100%. It's not like that. You will get deduction only for research and development. You have to prove that that expenditure is incurred for R&D. Or your owners are buying 10 crore rupees car, you cannot claim 100% deduction on that, yaar. Yes, you can claim what? Tell me, depreciation on that car if it is registered in the name of business. But you cannot prove that that car is used for research and development. Okay. So that will not be allowed as deduction under income tax law 100%. Is everyone clear with this concept? So with that logic, I would like to put one example in front of you all to explain one last concept of this particular section. Pay attention, please, all of you. Shall I say? Suppose this is research and development department and I bought a plant and machinery of 100 crore. Will I get deduction of this under scientific research? If yes, how much under which section? Please tell me fast.
100%, 35
I will get 100% under section 35 subsection 1 clause 4. Okay. Is it clear? Now, after 4 years, for example, after say 4 or 5 years, this machinery is not that effective. Okay. This machinery is not that effective to be used in the R&D department. So what can I do? I can do two things. First, I can sell directly. I can sell directly. Second option, I can send this machinery in the business department. Okay. I can send this machinery to my finance department. They will use it. To my HR department, they will use it. Are you clear? Rather than selling it, I thought that let's use in some other part of the business. Yes. Now the tax treatment changes in both the case. If I directly sell without using for business, okay. If I directly sell without using for the business, I'm not sending in the business. I'm directly selling from the R&D department. Are you clear? Then you have to pay deemed income tax because you are selling it. Deemed income under section 41 subsection 3. And deemed income will be lower of the two amounts. Shall I say? It will be selling price of the asset compared with deduction allowed earlier. Whichever is lower will be deemed income if you directly sell from the R&D department. Are you clear? Please tell me. Say 100 crore machinery on which I claimed 100% deduction. Now I am selling it for 70 crore. How much? 70 crore. So selling price is 70 crore? Yes. Deduction allowed is 100 crore? Yes. Whichever is lower, 70 crore will be PGBP. Are you clear? Along with capital gains implication if it is there. Okay. There might be capital gains, there might be capital loss. Whatever it is. Are you clear? So if I directly sell, I have to bear the burden of deemed income. Now the second possibility is I would like to transfer that to what? Business division. I want that machinery should be used for other purpose of the business. I don't want to sell it. It's not that bad that I should sell it. It can be used for 2-3 years at least in the normal departments. Are you clear? So now, please tell me, if I'm sending this machinery from my research department to my normal business division, will this machinery ask a place in the block of asset or not? I am asking you, will this machinery ask a place in the block of asset or not? Will this be as good as other assets or not? Suppose this is an AC. So it is now installed in the office of the HR manager. So it is as good as other ACs of the business or not? So you have to add to the block. Okay. But the law says in explanation 1 to section 43.1, do you know that there were 13 explanations to section 43.1 in which we have left explanation 1 earlier? Do you remember that? We have not done first explanation. And I told you I will do along with the scientific research section, yes or no? So the explanation 1 to section 43.1 says that when a machinery or any asset is brought to the business division, okay, the actual cost of that asset will be nil. How much will be the actual cost? It will be nil. It means the machinery, listen carefully, the quantity of the machinery will be increased. What will be increased?
Quantity will increase.
Suppose there were 10 machineries in the business division, in the block of asset. So one more will be added, which is coming from here. Are you clear? But the value attached to that machinery will be 0. Why? Because you have already claimed 100% deduction on that asset. Are you clear or not? Are you clear? Sir, then why quantity is added, sir? Why quantity is also why added? What is the need to add quantity? The need to add quantity is in future after 3-4 years, if they will sell. Are you able to understand? So this machinery should be liable for capital gains or not? Please tell me. Are you clear?
Yes, sir.
So in future, whenever it will be sold, you will be liable for capital gains as per section 50 and it will always be STCG. Why always STCG? Because it is a part of block of asset. Block of asset capital gains are always short-term capital gains. I hope you know that. Even if you don't know, we will learn that later on in the chapter of capital gains. Don't worry about it. Okay. So what is the treatment of this? You need to calmly think from where you are selling it. Okay. So if you are selling it, listen carefully. If you are selling it without using for business, without,
For business.
it means you are selling from where? Directly from the R&D department. Deemed income, selling price deduction, whichever is lower. Are you clear? But if you are sending to the business division, okay, and then you are selling. So when you are sending to the business division, it will be added to the block at nil value. And when you will sell later on, it will be always STCG. Is everyone 100% clear with this? Please tell me. Please tell me.
Sir.
So this is what this section is all about. These 7 sections. Okay. I hope it is clear to all of you. So now I will do this section once again for you all from the textbook in detail. Are you ready? So you have the complete idea of the section, right? The very first thing which you should ask me is, sir, what do I mean by scientific research? What is the scope of scientific research? What all things will come in scientific research? So the scope is very wide, very wide. It's not just physics and chemistry and biology. Okay. It's much beyond that. So the word scientific research means activities for extension of knowledge in the field of natural or applied science, including agricultural, animal husbandry, fisheries. You can do in various aspects scientific research. Scientific research is not done in one or two areas. It can be done at multiple areas. Are you clear? Then, if I come to this next page, there is a chart which is made by the Institute of Chartered Accountant of India. This is not my chart. This is ICA's chart, where they have put all the 7 expenses in one place. Okay. Like this one is your company deduction. Company. You can check. Biotechnology, other than 11 schedule, in-house research. Can you see that? Second one is revenue expenditure, capital expenditure, other than land 100%. And then the next 4 is your donation. Are you clear?
Yes, sir.
Now, 1 expenditure you have to learn in detail. 3511. I want you all to tell me what is 3511 cover? See here, please. Don't read. What does it cover? Pre-commencement does it cover? Pre-commencement? How many years?
3 years.
3 years revenue expense. Which all expenses are covered? I didn't say all. I have written 2. I didn't say all. I have written 2.
Yeah.
Salary and mark.
Yes, salary is covered. Raw material is covered. Correct or not? Okay. Post commencement also allowed? Okay. So let's see. Any revenue expenditure incurred by assessee on what? Scientific research. Then it is allowed. If you are incurring in what? In your business division, then is it allowed? That you can claim as per the other sections of PGBP. Yes. Expenses incurred within 3 years immediately preceding the commencement of business. On payment of what? Salary to whom? Finance department. Finance department. Then
Research people.
to research personnel or on material imports for such scientific research. Okay. Will be allowed as deduction. Okay. Under 3511. What about capital expenditure? Plus, first tell me and then we will read. What do you learn about what do you know about capital expenditure? Tell me fast. Pre-commencement allowed. How many years? Except land. Post-commencement also allowed. Except land. 100% will be allowed. What about the loss? Treated as UAD. Correct? So, explanation 1 to subsection 2 specifically provides that when any capital expenditure has been incurred prior to commencement of the business of the aggregate of the expenditure so incurred within 3 years immediately preceding the commencement of business, okay, shall be deemed to have been incurred in the previous year in which the business is commenced. Okay. Expenditure on land not allowed. Okay. Deficiency will be treated like UAD. See on the board. Depreciation not allowed. Agreed? Yes or no? And then later on, if you sell the asset, what will happen? That depends upon how you are selling it. If you are selling after using for business or without using for business, according to that, the treatment will change. Yes or no? Tell me fast.
Yes, sir.
Then coming to the donations. Which donation is covered in 3512? So you are giving donation to a research association or university college, provided such university college is what? Approved. Yes? Are you clear? Similarly, 3512A is for Indian companies, right? Again, the Indian company has to be approved. Yes? Similarly, 3513 is for what? Statistical and social science. Correct or not? Again, it has to be approved. Correct? And 352AA is for what? National Laboratory or IIT. Okay. And then at the end, it is written that if the approval is denied by the government later on, okay, then your deduction will not be disallowed. Agreed? Tell me fast. And then last but not least, 352AB, which talks about that in-house research, manufacturing other than 11 scheduled product. And then again, institute has given what? A summary of the entire 7 sections you can see over here. If you want to read, you can read it from here also. All 7 of them are there in the line. But it's not complete. This does not have complete information. Okay. Does it have complete information of the section? No. Our color book will have complete information of the section. This will not have come. This is not complete. This is just a summary of sections they have put. Okay. In the order of the law. Individually, they have explained all the sections in detail above. Are you clear? And then one last thing is what? These 3 section people. Yes, what are they supposed to do? To work. Yes. They have to furnish a statement and they have to give certificate. If they don't do so, they will be liable for a fee under 234G of 2000 rupees every day and penalty under 271K of 1 lakh rupees up to and 10,000 rupees. 10,000 to 1 lakh which will be imposed by the assessing officer. And even the disallowance will be done for the donor. Donor will also not get deduction. Agreed or not?
Sir.
Please tell me, please.
Yes, sir.
So this is what this section is all about. Is it clear, all of you? So we have done how many sectors today? We have done 3 sectors so far. Tea, coffee, rubber. Then similar to that petrol and natural gas. Correct or not? And then the third one, the big one is what? Is the scientific research sector. Okay. So I'll stop the lecture here because if I start with a new sector, it will not complete today. So it doesn't make sense. So tomorrow morning we will continue with a new sector. Okay. And then we'll continue with many other sectors in tomorrow's lecture. It will be a long lecture, as you all know, and therefore we will be able to complete almost all the sectors tomorrow. Okay. So we'll stop the lecture here. Tomorrow we will continue tomorrow morning.